Good morning, everyone, and welcome to the Traders Corner Investors Summit. I'm Anthony Chapman, and I'll be your host for today's powerful event. We're gathering at a time when uncertainty and volatility have become the norm in the markets. From interest rate decisions to geopolitical tensions and market-wide sell-offs, traders everywhere are searching for reliable, proven strategies to navigate the chaos. Today, you're going to hear from some of the most respected professionals in the retail trading world, each one bringing you tools, strategies, and systems they personally use to win in these conditions. This isn't theory, this is real world experience, battle tested and profit proven. Be sure to check out the chat box throughout the day. We'll be sharing each speaker's special offers and resources there. Many are only available for attendees and for a limited time. So let's get started. Our first presenter is a force in the futures and equities market. She's the founder of TradeOutLoud, and she's been helping traders build 6- and 7-figure incomes, often in just 2 hours a day. Please welcome Anka Metcalf, presenting Accelerate Your Income to 6 to 7 Figures, trading only 2 hours per day. Anka will walk you through the pros and cons of stocks versus futures, her blueprint for winning trades, and the best setups to look for at the open. So let's dive in. It's all yours,
Thank you so
Anka.
much. I hope
You're
the
welcome.
sound is coming through fine. So good morning, everybody. And today, I'm so grateful to be invited at the Investor Summit. So thank you so much for the invitation. And also today, we will talk about how you can turbocharge your income and why not just create that supplemental income as well. I will teach you how to generate a 6 to 7 figure income in 1 hour or less and create your own wealth ecosystem. Now, remember, whether you have capital to trade, that's fine. But if you don't have capital in the futures market, you have a lot of opportunities to trade proprietary accounts. That means that there are companies out there that are willing to provide you with the capital to trade as long as you can prove that you can trade. So my name is Anka Metcalf. Thanks so much for the intro. I just want to add here that I have been trading for more than 35 years. I have been on the institutional side for more than 10 years, and I'm the CEO of TradeOutLoud.com. And this is a boutique trading firm that offers our clients the personal approach to education and trading every single day. And I'm an expert in high velocity trading. High velocity trading is a style of trading that provides you with an edge when it comes to trading. It provides you with more quality trades, and it actually we stock for setups that have the possibility to power up into targets immediately. So how many of you guys would you like to take control of your financial future for you and your family? Just type one in the chat box here if you would like that for you or your family. Or, hands up for everybody that wants financial independence. Of course, this is your goal, and this should be everybody's goal, like to definitely, do whatever we like in life and generate that income, have that engine that generates our income or supplements our income. So this webinar is for you if you're really tired of second guessing your trades. If you want a repeatable system to grow consistent income, if you're done with information overload and want a real actionable setup that works for you in any market conditions, if you're looking to profit in any market, whether it's a bull market, bear market, or even a choppy market, because let's not forget that the market has been into a sideways range for more than 2 weeks now. And traders, especially day traders, had great difficulty in identifying high-odds trades. And swing traders, well, that's a different story because they were stuck in trades for 2 weeks. They didn't stop out, but they were stuck in trades for 2 weeks if they were trading the major indices or if they were trading the major ETFs like the Qs, SPYs, or Diamonds. If you want a smarter way to make money work for you, this is the right place, and you're at the right place right now. If you're fearful that you will lose money with your trades, this is the place for you, because I'm going to teach you in this class today, this webinar today, how you can adjust your risk so you risk the same amount on each and every single trade. And then the beauty about it is that you position size. you position size and see how many contracts or shares, if you're trading stocks, you can fit in your accounts, in your allocated amount per trade. And also, if you're fearful of never being able to retire, if you want to supplement your income, this is the right place. Now, let's get real. And this webinar is not for tire kickers looking to get rich quick, for people who aren't willing to learn or follow a proven system, for traders who are not coachable, for traders who want to gamble, guess, or rely on hype or headlines, for anyone who thinks success in trading happens without discipline or skill or education, those who would rather make excuses than take action, or definitely anyone who wants to reinvent the wheel and say, hey, I came up with a strategy. Look, Wall Street has been trading the same strategies for tens of years, hundreds of years. What makes you think that you're going to be coming into the market right now and saying, oh, I invented a strategy? No, you're actually taking a small piece, a derivative from a system, and you're applying it in your own way. And you don't know if that's successful or not. Let's stop with reinventing the wheel and trade what Wall Street is trading. If you're listening to every guru out there on social media for their analysis, if you are not an action taker and not willing to put in the work, then this webinar is not for you. So what we're going to be doing today is basically talk about how you can fast track your wealth, because trading is not about generating income, it's about producing wealth. And watch your account grow faster than ever possible in your life, hitting 6 to 7 figure a year, even if you do not trade your own money. Like I said, you could trade prop account. Zero stress trading magic. So cut out the noise, trade with confidence, and see how simple things can be. And I prove this every single day for years, for more than 10 years now, since I've hosted and I have been running the futures income trading room. I'm going to also teach you an autopilot trick and discover how to identify high setups and how you can place your entry, stop, and manage the trade. And today I have a great example because we did one of these trades as well. They lined up. They don't line up every single day, these autopilot trades, but sometimes when they do, we absolutely take them. And also, we're going to talk about the secret strategies of the pros. So get insider information from the exact system used by top institutional traders. And of course, the ultimate financial freedom. Craft the life you want to live without limitations. Now, before we dive into trading, you know, mindset plays a very important role. And you have to set a goal. A goal is a dream with a deadline. And this is what Napoleon Hill said. So in order to succeed, you need to have a plan with a deadline to achieve your goal. For example, when you want to start, you know, learning how to trade, you have to have a deadline, because if you're going to say, hey, I just want to learn how to trade, but you don't put a deadline, you're going to go day after day after day after day. Life comes in your way, and then you're going to, you know, today you've got to, you know, wash your car. Tomorrow you've got to do something else, you know, but then you got to go to a birthday party. Then you have to do some other things. But you need to put a goal, because if you say, hey, I'm going to learn how to trade in 30 days, or I'm going to learn technical analysis in 30 days, then you're going to systemize every single day what you're going to be learning on each and every single day to fast track to where you want to be. Now, here's the truth about trading. You don't have to be a math whiz. Literally, you don't have to be a math whiz. You could be really fast on math, and then you don't even need a calculator. I, for example, have a calculator on my desk all the time. The markets are not about math. They're about psychology. They're about emotions. They're about energy, because money is energy, and the power of managing risk. This is the quintessential information about the market. So my goal for you today is to understand the process of trading. Now, before we dive any deeper, I just want to share with you a quick piece of information and why I am trading futures right now. I have been always a stock trader. So 30 plus years ago, when I started my career in the financial industry, I was literally only involved in stock trading. So in investments, in stocks, in ETFs. So I never was on the futures side. When I decided to trade on my own, given my job, I definitely was day trading stocks. I invested tons of money into my day trading education, because it's a totally different ball game when you're coming from, you know, from the institutional side, from the definitely from the investing side to day trading is a huge major shift. And I'm not going to lie, but it was the first time when I took a trade, like literally my hand was shaking out of the mouse, and I had like tons of institutional trading experience, and it's totally different. It's a different ball game. So after trading for about 10 to 12 years on my own, so as a professional trader, this is how I generate my income through trading stocks. My accountant said, hey, you know what? We have another individual that we're holding the books for, and we're doing their accounting. And we think that it's a great option for you to start futures trading as your day trading instead of stocks day trading. And I'm like, no, I just love trading so much. I'm just the stocks, and I'm never going to switch to futures. But then I took literally, you know, like I gave it some thought, and it took me about a month until, you know, I kind of digested the information that they were telling me, because when you're trading futures, you definitely pay less taxes. So, and there's a much less work involved when you report everything at the end of the year. So I give it a lot of thought, because the one thing that I did when I started my day trading every single day was do a rundown into the indices, not in the futures indices, but I would look at the Qs, the SPYs, Diamonds, and Russell. And I would take the pulse under the hood to see what I would be trading that day. I would look for relative strength or relative weakness, and based on that, I had my own analysis. And then I wanted to give it a go and say, okay, you know what? I'm just going to try it for about a couple of weeks to see. I'm just going to try the Qs and the SPYs. And it was the most boring 2 weeks of my life. And then I'm like, man, I'm not making so much money trading the Qs and the SPYs. I mean, there's something going on. And then I went like, maybe there is something to the futures. And here I'm going to talk to you about the leverage and the more buying power that you have access to when trading futures. So instead of analyzing the Qs, the SPYs, the Diamonds, and Russell every single day, then what I did is I actually started analyzing the futures market. I was looking at the futures market before to see its activity overnight, but I wasn't really trading it. So then when I started to trade it, my results went 10x from my day trades in the Q, SPYs, or Diamonds. So 10x, guys. So I was making 10 times more money. So we're here to talk about leverage, and that was my turning point where I said, you know what, I'm not going to be trading day trading. I'm not going to be day trading stocks anymore, at least for a while. And I'm going to give this futures a go. And I never looked back. And this was like almost 11 years ago. The leverage is the big thing that really has a high impact. You can control a large contract value with small amount of capital. And for example, with just a few $1,000s, you can trade contracts worth tens of thousands of hundreds of dollars. And the results, potential for amplified gains. And again, like I said, in my case, it was like 10x. And you have really high liquidity because the futures market, especially the S&P, NASDAQ, crude oil, or gold, are among some of the most liquid in the world. And by the way, because we're talking about oil, I just initiated a swing trade in oil and in oil futures this morning, and it's going really well for us. I hope we have time so I can share that screen with you guys. So you get a tight bid ask, and it has very efficient entries and exit, fast execution, even in volatile markets. It has a good control, even better than stocks at some times. And also nearly 24 market access. This is what I call hands-on risk, because if I, for example, now initiated a trade this morning in the Dow futures long and in oil long, and I still have a position at S&P long. For example, if the market closes at 4 o'clock and if I want to potentially trail it and take some profits as the market reopens at 6 o'clock, then I could do that anytime. So it's almost a 24-hour access to the market. It gives you a much better opportunity to raise your stops, manage your position, etc. And also you get low trading costs. Futures commissions and fees are often lower. And of course, you don't get the day trading pattern rule, so you have more freedom to trade actively. It's super tax efficient, and this is why I have navigated to the futures market. Many US futures contracts qualify for the 60-40 tax treatment, 60% of gains taxed as long-term lower rates. So this is phenomenal, right? And 40% tax as short-term, and that's ordinary income. You don't get you have no wash sale rule, easier tax reporting and cleaner bookkeeping. So this is great. And of course you have transparency and regulation because it's traded and regulated on regulated exchanges like the CME and NYMEX. You have diversification opportunities because you can trade a wide array of instruments from indices to currencies to commodities, bonds, or even interest rates. And also it allows you to hedge or speculate across the assets. So I often use the futures market to hedge into my my portfolio, my stock portfolio, because I'm still swing trading and really actively investing in stocks. Also, professional level tools for everyone, access to institutional grade platforms, real-time data and risk management tools that you have at your fingerprints with every single platform that is out there today. And by the way, when I started futures trading about 11 years ago, futures trading was not very popular. I could tell you this, and there was not much volume, not the volume, certainly not the volume that you see right now into the futures market. And shortly after I got into futures trading, more and more institutional traders from the stock trading desk just navigated to the futures trading desk, and there was an increase in volume and trades into the futures market. So makes it a really great, robust market. And again, you don't have to have, you know, tons of money to get started. In fact, you don't need to have any money to start in the futures market because you can trade prop. These are some of the things that I trade every single day. In my trading room, I trade the Dow, the S&P, NASDAQ, and Russell. It doesn't mean that I'm going to have a trade in all of these indices at the same time, but sometimes we have just trades in the Dow. Sometimes we just have trades in NASDAQ. You can check out our portfolio, which is on our website. Crude oil, I don't really, because of the volatility, I don't love to day trade it, but it is top watch for my swing trades. For example, when we had the attacks of Israel on Iran, oil went ballistic. Guess who was in oil and making a fortune, making a quarter worth of profits? Here, I'm raising my hand. So it was very nice to trade this one. Also, natural gas. This is also a great commodity to swing trade. I don't really trade crude oil, Brent, and gasoline, not so much, or heating oil, but I am big on oil and natural gas when it moves. Bonds, a little bit sloppy, but I like them for swing trading. All of the commodities here, like and gold, sometimes we have gold and silver, sometimes we have some swings in it, sometimes not. Platinum, copper, we have a huge trade in copper, by the way, and it has just rolled into the new contract, so really happy with the result in it. Massive gains as well. And I just want to mention one thing, like trading is not about only having day trades, it's about a blend of having day trades and swing trades, because the real money is into these bigger trades. But these bigger trades, the bigger commodities, are not going to line up every day. They're not going to line up every month. They may not line up every quarter. So once you get an opportunity to get a trade in copper or in silver or in gold or in oil, you're set for the year. Okay, so for the year. So my trading universe is basically I trade YM, S&P, NASDAQ, and RTY. And metals, I trade gold, silver, and copper. And energy, I trade natural gas and crude oil. And in bonds, just ZB. So my goal for you today is to understand the process. So the process should be gradual and should be shifting higher. These are, if you look throughout my trading results through the years from my brokers, you're going to see that I always reset my account every single month, but every single month I take profits. So I do not need to grow my account right now. I'm trading a $500,000 account. The results, I'm going to show you the results in a second. But the results should be exponentially higher, as you can see here. One of the biggest problems that traders face is identifying the directional bias, the time frames, and of course there's this massive confusion. Everybody yesterday was so confused about the market action because the market was going lower, and everybody thought that, oh my God, we're going lower just because we are tapping into almost all-time highs. We're getting heavy resistance there. We're going to crash. And that was not the case because we are in a massive bull market. We're not even in a power trend. We're in an ultra power trend on literally 4 major time frames. And if those 4 major time frames are in such massive power trends, the only option that you have is to go long. So therefore, you're going to wait for breakouts to happen. So a base and breakout, you're going to be looking for pullbacks and any kind of buying opportunity in here. And one of the biggest problems for traders is to identify whether long or short at the beginning of the day, especially when you're day trading. But if you have these massive time frames that are telling you that the shift should be higher, there shouldn't be any problems, and you should be looking just for buys. And on days like yesterday where you have like a biggest pullback, you either find something that is weaker. Russell was weaker, the Dow was definitely a lot weaker, and you could have some scalps here and there in shorts. But other than that, if you're looking for velocity, meaning the power of price to move from your entry price to your next target, which accommodates at least 1 to 2 Rs or 3 Rs, then you're going to be looking for long positions. But there's a 5-step process. First off, if you want to start trading futures, you have to open an account. Well, I would say first, you have to be educated because the futures market is very wild. It's a little bit wilder than the stock market, but it offers you 10x profits. So first of all, you have to get your trading education. Then you have to open an account. Once you open an account, see how much money you can allocate to that specific account, or if you have a prop account, that's fine. And then you have to determine your risk size. How much you're going to be willing to risk per each trade. And the other thing is how many trades you are going to take per day, because that's very important. I allocate myself between 5 and 6 trades every single day, but I don't take 5 to 6 trades every single day. Most of the time, I take 1 trade a day, and I'm like one and done. I lock in profits, and I'm done. But there are days, for example, like today, where I initiated a swing trade in the Dow. I initiated a swing trade in oil. I initiated a mini swing in the S&P. I had a day trade in NASDAQ, and all long. Okay, so you could have multiple trades and multiple assets. Also, have a trading plan. The trading plan doesn't have to be complicated. It has to be with what that works for you in the market, and have it in front of you at all times. Because if you see it every day for a year or 2 years, I had my trading plan literally on Post-its. I had like 7 Post-its stuck to my monitor for a couple of years. And this was like, oh my goodness, like probably 20 years ago, 20 plus years ago, 25 years ago, because I needed, and I kept those on my monitor because I needed to have them in front of me. I needed to have my size. I needed to have, my checklist. I needed to have everything, my strategies in there. So I needed to have all these details in there. So I would be focused every single day and I wouldn't have to chase anything. The other thing is to trade your plan and tweak it all the time, eliminate what's not working for you. And in order to do that, you need to, and I think that everybody in here should be aware that you need to have a journal, because the journal, if you evaluate it, you could do it monthly evaluation, but the best evaluation that you do, especially on a strategy or on a new trading plan that you have written down, is to do it at the end of the quarter, because you have been into the beginning of the quarter with earnings season, right? That's happening into stocks where the futures market is more active, and you're going to have the trending part, because we are trading right now. I mean, there's a surprise that we're long right now and that the market is making all-time highs. It's not a surprise. We have been talking this in the trading room, and I have been teaching my traders that yes, we're going to be bullish here this week, very, very bullish. And you know why? Because we're trading into a window dressing week, and yes, this is bullish. So if you know how to compile your trading plan, if you know how to take advantage of these special periods in the market that they're not really they're not discussed on social media, they're not discussed in the media, right? But you need to know that somebody needs to teach you what these elements are. So if you know what these are, you're going to have a really bulletproof trading plan. And when you're doing your quarterly analysis, you're going to see, okay, this is working for me, this is not working for me, this is working, this is not working. And what you're going to do for the next quarter, eliminate whatever is not working for you, the timing when you trade, the system that you trade, just every single little detail, just take those out and focus on the things that work for you. So analyze the market using the TradeOutLoud gold analysis system. And this is the way I analyze the system. This is our gold system. And why is it a gold system, by the way? Because it's pure, it's simple, it's accurate, and it's valuable. And it doesn't fail. First of all, gold analysis and decision system is all about evaluating multiple time frames in a very simple manner. It determines your daily buys by just looking at one candle. This is for beginner traders. That amplifies the multi-time frame analysis, effortless bullish above or bearish below settings. We have clear setups, entry stops and targets, and price precision. The risk per trade, the velocity, the super easy trailing system that we apply on each and every single trade, whether it's a day trade or a swing trade, no emotional stress trading, and timing precision. This is what the gold standard is for us at TradeOutLoud. So the gold system is generating profits year after year without adjusting or revising anything. So we don't revise anything. This is a pure proven system that we trade every single day. And it's not easy for me to come here in front of you and say, hey, I have the proven system. It is, because you can have access to my performance from 10 years ago. And you can see it year after year, and you can see it month after month. So I'm not BSing, okay? So high precision day trading, power hour. So I'm just gonna give you a short example here, and this is a 2-to-1, a 3-to-1 is more advisable to have. So this is what you need to strive for. You need to have velocity, the power of the price action to move into your directions. For example, this is a stop. This is a stop. This is a short setup that also confirms the doji decision below the 10 EMA here. The stop goes above the doji. The first entry could have been below the doji, but there was still not a lot of information. So I waited here to have two systems that were in one. So we had the doji confirmation, and then we have the sandwich flare down. And this was the first target that was based on the prior pivot low here. And this was a 2-to-1. And of course, we had another target here that came from a higher time frame. This is why you need to have that multi-time frame analysis. That comes really handy. And this is the out area. This is more than a 3-to-1 trade right here. So wealth generating swing trading identifies, we identify these trades also in the power hour, because institutions do not like to sit around and they take their decision into the first hour. And in fact, day trading is often powered by institutional momentum, and the momentum comes from heavy buying, whether they're buying Nvidia, whether they're buying Amazon or what have you, then that's going to impact NASDAQ. So basically, it's like a crock pot here. So the power hour is making your money work for you with zero effort, and every single day trade and swing trade that I identified in the first 30 minutes to 1 hour. So we're going to show you some examples right here. So this is the trade. You can see it here, 3,300. This is a breakout pattern. You can see that the stop is placed over here, just below the lows. So the profit calculation on this one would be about 95 points. That's 100. That's times 100 per point. That's $9,500 per profit per contract. So if you're holding with one standard gold futures contract, you've just made $9,500. If you're holding two contracts, so on this move right here from the breakout to where it is trading right now, so on this breakout right here, okay, so you've just made $9,500 with two contracts. And again, it's depending on your account size and how many contracts you can fit into that allocated risk. But I just want to show you the opportunity here. Here is a gold, this is an oil trade. You can see the breakout that happened right here. The entry is 64.30. This is a trade that I've done. This is a trade that all my members have done. And again, depending on your account size, you can trade with micros and you can trade with full size, depending on how much money you have in your account. So the entry is right here, 64.30. The stop is just below this pivot right here at the confluence with the EMAs. And the price And the price action right now, current price $69. You can see here, so it broke out from $64.30 to $69, right? We actually capitalized way higher on this trade because you guys know where oil went. And in case you don't know where oil went, it went and had a high all the way to $78 and almost 50 cents. Okay, so $78.50. We had an ultimate target at $77. So you can imagine, compound that to see how much profits we've made. But on this move alone, from here to here into the 200 SMA, we capitalized on because this was the first target. On a first target, we took partial profits for about $4.74. So that means with one contract, $4,700. With two contracts, $9,400. With five contracts, $23,000. With 10 contracts, $47,000. And if you trade this setup with micros from here to here, that's $470. I mean, with the buying power and with everything taking into consideration, a $470 day, I take that every single day. All right. So you want to start trading, but you don't know where to start. A lot of traders, think that, the best way to do it is to just get going. But the reality is that you need a proven system. You need a system, all in all. Whether you're, I'm teaching you the system, or you want to go elsewhere, or you want to, just, wing it, it's up to you. But I'm telling you, you're dealing with the most brilliant minds in the industry. Sometimes you can make your money work for you in less than 5 minutes. So 5 minutes of workday. These are some CPI numbers that we have traded. And again, it takes a proven system to know where your entry is, where your stop is, and how you're going to manage the risk. Because a lot of time, what the easiest part about trading is? The easiest part about trading is pushing the buttons. Well, in reality, that is not the most important thing. The most important thing is evaluating your trade before you push the button, because everybody can push a button. Okay, everybody. If I talk to my neighbor and say, hey, can you buy this? Of course he can buy it, right? But if I ask him, can you manage this trade for me? He's going to go like, what? Okay, so managing the trade, not leaving money on the table is a big thing, okay? Also, this is another trade. This is another 5-minute workday in our training room. You can see it right here. Okay, we explained it. I'm not going to go through it. We don't have that much time. I want to get more information into this presentation. Here's another example. You can see here, this is the power hour move. Okay, and here it is again. These are actually CPI numbers that I have here. This is 52 points in 1 minute. That's over that's over $1,000 per contract. Obviously, 10 contracts, $10,000. Okay, so turn your computer in your personal ATM. This should be your goal, and this was my goal. And in fact, I had a mentor when I first started that says, and this was the catch, right? Because when I heard that, I'm like, oh my gosh, I want that. My mentor, or before he became my mentor, he said, I could turn your computer into your personal ATM. And I'm like, sign me up. And I never regretted it, because it truly is true. This is the perfect time to learn how to trade your way to financial freedom, because you're going to still have a very volatile market throughout the year. And not only that, but we're just going to get really volatile next year, and the year after that is just going to be crazy. Election years are volatile as well. So 4 years from now, etc. So why is it going to be volatile? Tariffs. We're going to have the tariff war all the time. FOMC rate cuts or not. We're going to have to wait and see if the FOMC is going to cut the rates now in July. We're looking forward to mid-July. And by the way, mid-July rate cuts, the market is going to go ballistic. So it's going to be a really hot, super awesome summer. You still have conflicts and war. By the way, war is very bullish on markets. Massive layouts will continue. And again, you don't want to be a victim. I have a friend that was just laid off. He's like, what am I going to do? I got to find a job. Where am I going to find a job? And I'm like, you know what? The market has a job for you. Okay. So what is the power hour that I'm raving about? Well, the power hour refers to the New York trading session open, where typically there's a surge in trading activity and volatility. This period is often characterized by higher trading volume and more significant price movements, which can create massive opportunities for traders to capitalize on short-term market fluctuations. Best time to trade from 9:30 to 11:30, and I would say I would cut this short a little bit, because it's basically from 9:35 to 10:35. I'm not going to get in trades right at 9:30, but 9:35 is the and by the way, I don't know if you guys know, it's the first reversal time in the market for day traders. Not a lot of people know that. And then there's another one at 9:45, there's another one at 10 o'clock, etc. But the power hour is incredibly powerful. This is the time where you're going to find all your swing trades. This is the time where you're going to find all your day trades. So it's just going to be a power-packed time for you. And if you're deciding to say, hey, I'm only a swing trader, guess what? You just have to watch this hour and then you're set, okay? Because most of the time things happen in the power hour. And that's because you have the most volume, you have high volatility and news momentum, and you have the reaction. That's when you're going to get the breakouts. That's when everything is going to happen. And don't forget that oil inventory numbers are coming at 10:30. You have gas numbers that are coming as well at 10:30, right? You have that's on Wednesday and Thursday. So that's when these commodities are going to rock. Now, as far as gold goes, gold is on a typical watch, but again, I only watch it in the power hour and I set alert for the rest of the day and I revisit it the next day. So I revisit it from 24 to 24 hours. Now, a lot of times traders ask me, what is the worst time to trade? And that's why I included a slide in here. So before any economic news release, so don't pre-position ahead of any kind of major news release, because that is going to be a surprise. It's a surprise for the market as well. A couple of hours before the FOMC meeting, I usually do not trade FOMC. It's not that I usually do not trade. I don't trade FOMC. If I see something that is literally mouth-watering, maybe I'm going to do it half the size or quarter size. But other than that, I use the FOMC meeting to chill, and answer to questions, talk about the market a lot. And yeah, if there's a trading opportunity, I will highlight it in the room, but I'm not going to be taking it. Also, option expiration day and quadruple option expiration days, those are very choppy. I do not trade those. I stay away. I reserve the right. Why? Because it's in my trading plan. My trading plan is my Bible. And of course, the last day of the month is going to be super choppy, and just watch out because that's going to be on Monday. So you need to have a really good plan for those typical days of the month, because they carry a lot of connotations and you got to know what they are and what happens into the last day of the month. Now, if you guys are ready to step into a system that is going to take your trading to the next level, but only if you are coachable, I can change your trading habits to my trading habits, because I had to change my trading habits when I got into day trading more than 25 years ago. So you can trade with me if you're losing money into the market, and that is a big problem, right? If you're losing money in the market, if you want to switch things around, because obviously you're doing something that is not working and it's not worth repeating the process. If you do not have a system that is working for you, and if you're stressed, if you're crying, if you're punching your monitors, if you're throwing your mouse on the floor, it means that you don't have a system, because trading is boring and needs to be boring. If you don't have a process that eliminates emotions, right? Because we are relying 100% on technical patterns. I'm not creating a bias based on how I feel, based on how I would like the market to move. There is literally no subjectiveness. It's just objective technical analysis. If you lack confidence, that is because you lack education, and we could take you a step further. For example, in the trading room, not only that we point out the trade, so it's not like a signal service, we talk about the trades. Because when I first come on the mic, we do the pre-market analysis, pre-market game plan. So we do the pre-market game plan while we determine the key levels and also the institutional breaking points for the market, and also the targets and where it could potentially have velocity to run into, whether up or down. Of course, the bias. It is a hand-holding system, because not only that, I explain the trade, what kind of setup we're using, what I'm seeing in the market, the momentum that we are having, the volume, whether I'm seeing buyers coming in, whether I'm seeing low momentum, whether I'm seeing selling, or anything that I'm seeing in the market, I'm communicating. You could definitely learn. It's one way to learn. It's the cheapest way to learn from somebody that has been doing it for a really long time. and we have been doing it daily for a really long time. And if you need that holding system, this is for you. If you want to learn as you earn. And again, you have to be coachable and you have to respect the rules, because if you don't respect the rules, then definitely this is not for you and you don't belong here. You need to position size. You need to respect everything that I'm doing and I'm saying in the trading room. There is no reinvention of a trade based on my trade. You either trade the trade as is or you don't trade it. And lastly, you're going to be developing healthy trading habits. It's going to put you in a stereotype, because you know what to expect. We're going to do, at 9:20 we're going to do this, at 9:30 we're going to do this, then we're going to take a trade, then we're going to start managing the trade, and you can learn a lot from this. So the Futures Trading Room is for you guys. If this is for you, we're open Monday through Friday from 9 o'clock. We open the room at 9 o'clock. I come on the mic usually around 9:15 to 9:20. And in this time from 9 o'clock to 9:20, I'm collecting information on the market, on the momentum as it's heading into the open. It's not like I'm looking out the window, but I'm here in the room, and the room rate is $299. The price is going to go up to $425 very soon, because you got to put a price on your effort and my time to sit in the room and trade and put these kind of high caliber trades on for everybody. So we're trading basically stock indices. Our focus is on NASDAQ, the Dow, the S&P, and Russell, gold, oil, bonds, natural gas, copper, agricultural products when they are on the move, currencies, and more. So what's included in the plan? You're going to get the pre-market game plan already delivered with the key levels, institutional levels. You're going to get real-time precise trading, 100% guided trading. So when I'm going to tell us, for example, if there's a trade right now, let's say hypothetically, it's not a trade, but just as an example, I'm going to say ES long 61.85. The stop is going to be 61.75, and then the targets are going to be 6200, 6207, 6212. And that's not all. So you're going to get this. I'm going to explain the setup. It's a base. It is, it is based on a power trend. The price action is compressing or whatever it's doing at the time. So you're going to get the explanation. And then if the trade triggers, then you're going to find out how I trail it in real time. Whether you're trading with multiple contracts or one contract, you're going to get guidance. I take usually between 1 and 3 trades a day. Today was a little bit unusual because I took more trades. And basically, I don't consider oil and the Dow as day trades because they are swing trades. So basically, as day trades, we had NASDAQ and ES, and we had another trade in the Dow. Also, you're going to get exact parameters. So it's not like, oh, you should get it above this resistance. And then you're like, what is above resistance? Do I get it at, and if the resistance is at 85, you're going to go like, do I get it at 85? Do I get it at 85 and a quarter? Do I get it at 87? And you're like, where the heck am I going to get it? So I'm going to give you the exact price for everything. You're going to get real-time response to all your questions. We have lectures. We had lectures almost every day this week because we had the window dressing week. So I had to explain the window dressing week. On Monday, we're going to have a lecture about how to trade the last day of the month because that carries a lot of significance for funds and hedge funds, etc. You're going to get live screen share and a whole lot of information. So if you want to head on to our website, this is, I don't know if you can see it, but this is our website. You go under services here, and this is the live trading room. I could post it in here for you in the chat box. You guys want to take a quick look at it. And by the way, at the very, very, very bottom, you're going to have the pricing here. The pricing is $29.99 for the yearly, $299 for the month. 5-day, by the way, it's Monday through Friday, 5-day pass. And you have the futures trading room performance, okay? So you have 2025 trades, all the trades from 2025. We also update all the trades at the end of the month. So the month of July, and by the way, this is a massive month. This is going to be like more than a 40,000 month. It's tracked by contract, not by position size. You're also going to see here a glimpse into my personal account to see how much money you're going to be making with position sizing. So you're going to see year after year, let's say 2000, 2019, etc. I mean, show me somebody that has a track record like this. Like seriously. All right, so if you're interested in the trading room, is $299. The price is going to go up with July 1st. So thanks so much, everybody, for listening, and have a great rest of the day.
Thank you so much, Anka. That was packed with real value and a clear, efficient blueprint for a short session trading. And a big thank you for that generous offer as well, traders. The link to Anka's trading room and her website and her email is all in the chat box, so be sure to check it out before it expires. Up next is someone known for his precision timing and deep market structure expertise, Simon Klein of TradeSmart. His session is titled Mastering Market Tops and Bottoms. Simon is going to show us how to identify turning points, read price structure, and execute with confidence when the market is most vulnerable to reversal. So let's bring him on. Simon, it's all yours.
Just unmuted. Can you hear me okay? See the
I can
screen?
hear you. Yes, we got your screen as well.
So I got 45 minutes, yeah?
Yeah. Yep.
Right, I'm going to just pop out the, I see the chat or questions. Which one is the one to look at?
It should be like when a question comes through,
yeah.
It'll be like orange, and it'll be on like the left side of that box. So I don't see any questions right now.
I can see. Can I type in anything, or you can type in? There's a chat as well.
Oh yeah, yeah. To the right there where it says like attendees. Below that, you could type to the whole group, or you could just type to an individual. You just kind of switch it.
Okay, got it. Perfect. Okay, shall we begin? That's good. Okay, thanks, Anthony. Mastering market tops and bottoms. So welcome everybody. It's great to be here. You are in the right place if you want to learn how to spot major market turning points. And you want to get your questions answered today. We're going to take questions at the end. So here's a picture of me speaking in person at the New York Traders Expo not so long ago, giving a similar presentation. And I was also invited to speak at the Boga Investment Forum in China as well. A little bit more about me if you're here for the first time and you don't know about TradeSmart. We're a trading education business, and we focus primarily on teaching you how to read the market professionally and how to run a successful trading business, including how to develop your own trading plan and strategies which fit your personality and lifestyle. So I've been trading for many years. I've also given webinars on many different platforms and education, both professionally and retail. There's a quick disclaimer. And so, very important in this day and age is to focus, okay? Turn off distractions and just focus for the next, let's say, 40 minutes, and you'll get a lot out. Remember, like in everything else in life, what you put in is what you get out. So focus and be in receive mode, take notes, and most importantly, keep it simple. So this is the beauty of everything. As Tony Robbins says, complexity is the enemy of execution. So when you're trading, you don't want to make it too complex. I went through that. But it's not simplicity based on a lack of understanding. It's masterful simplicity. And very, very important, when I first started learning how to trade, I was taught professionally. We were taught how to, I traded basically New York Stock Exchange. That's it, New York Stock Exchange stocks. And we were taught the specialist system, as in by looking at the time in sales and the prints going off and the open book, which is the level 2 of the specialist. We were able to spot what the specialist was doing, and then we could, if the specialist was buying, we would buy. If the specialist was selling, we would sell. But what happens, like what happens in many industries, is that was when the specialist was human. But technology changed, and the specialist then became part human, part computerized. Maybe nowadays it's all computerized. And the system that I was invested quite a lot of time and energy in learning, and the trading floor that I was working on, we were no longer profitable. It no longer worked. That's what we call disruption. And it was back to the drawing board. So I went through a journey after that as the trading floor closed down, and I went to work for a different trading floor. And it was quite a journey of trying all different sorts of indicators, probably much like many of you have tried or are trying now. I tried different indicators like moving averages and oscillators and various other things. And I tried to come up with a way of using them, and we tried to automate some of it as a trading floor, and nothing was consistent. And it was very, very complicated. And we decided, oh, if we're using, say, 5 indicators, if 3 said buy and 2 said sell, we'd buy, but that didn't work either. So it was basically back to the drawing board. So what I did over time was basically remove all my indicators from the charts, and I basically asked myself, what moves price? And this is what was the foundation of how I developed this way of reading the market, which is a foundation for trading. And the beauty of it is, once you learn this, it will never change. Technology will never disrupt this, because this is how all markets move, and that will never change. So it's simple based on a deep understanding rather than a lack of understanding. It's like when you start trading, you think, oh, it's so simple. And then you kind of, you might have a bit of beginner's luck and make some money. And then after that, you go through a very, most people go through a very difficult journey, and they lose money, and they kind of don't understand why. And it seemed easy at the beginning. And then ultimately you get back to that simplicity once you go through the trading, the learning curve, the training curve, if you want to put it that way, and you become a master of reading the market, a master of yourself. So, and you go back to simplicity, but with a lot of experience and understanding. So that's the key. So that's basically how I came up with this way of reading the market. There's nothing new here. It's just put together in a way that's very simple to understand. So I'm going to teach you something now. So professional chart reading. So we're going to use this framework for mastering market tops and bottoms. And you only need, want to keep it super simple, you only need 3 things. And the 4th thing that we had over here is multiple time frame analysis, which is the time aspect. So we can take a bird's eye view. We can take, a view from high up, and then we can kind of zoom into the lower time frames. The only things you need are pivot analysis. This is our way of reading the trend using Japanese candlesticks alone. You don't need anything else, no moving averages or anything like that. Supply and demand, that is where price moves from and to, and it always will. That will never change, because that's the way all markets move. Price direction analysis, everything you learn about Japanese candlesticks boils down to one thing, is what direction is price going in? Is it going up or is it going down? And we have a way of doing that within seconds of looking at any time frame. You can know which direction the market's going in. Now, put these together. If you know that this, say, for example, the trend is up and you've just pulled back, the market went down to an area of demand and the direction changed to the upside, well, wouldn't that be a good opportunity to buy? The market's telling you with the price action what it's doing. And we do this on multiple time frames to make sure if you're buying on a smaller time frame, you make sure that the larger time frame's in an uptrend and has room to move to the next level of supply or demand, depending on if it's an uptrend or downtrend. Now, the beauty of this is not a strategy. This is a way of reading the market. Just like understanding when you're driving a car, how to drive a car and understand road conditions is not, is not teaching you actually a particular way of driving, for example, like how to drive, in congested pedestrian areas. You're going to have to, that's one way of driving. You don't drive the same way on the freeway or highway as you do in a highly congested pedestrian zone, for example. You have to adjust, but you need to be able to read market conditions just like you need to be able to read road conditions. And if you have a strategy and you apply it in the wrong conditions, it's not going to work. And if you don't know how to read the conditions, then you'll never know. So this is the key, and this is the beauty of this, and this is why it will never change. The charts will teach you, if you come down here, the charts will teach you all you need to know once you have a framework for reading them. That is it. This is where you start to learn how to trade by listening to the market. The market's going to tell you. And once you have that, you know what the market's doing. So this is the key. And then once you understand how to read the market, then you can take the next stage, which is developing a strategy. If you develop a strategy without understanding how to read the market, that's very much the same as learning how to drive a car without understanding how to drive on a road. You know, you might be able to move the car backwards and forwards, but you don't know what a red light means stop. You don't understand what that means, and you just drive recklessly because you know how to control a car, but you don't know how to control the car on the road, if that makes sense. So foundations first, and I believe that many people start learning how to trade, learning a strategy first, which is the wrong way to do it, in my opinion. And this is why I ask myself, why are so many people, like, imagine if you went to medical school and the success rate of people starting medical school was 10%, which is kind of what the success rate of people starting to trade is, around about maybe even less than that. That wouldn't be good. There would be a problem with the medical school, wouldn't there? So I asked myself, well, what is the problem with the trading education? There's a lot of trading education now. Why are so many people not succeeding? Maybe you're not focusing on foundations first. Like if you learn medicine, for example, you have to learn foundations like medical science. You have to learn biochemistry, physiology, anatomy. Those are things that you need. You wouldn't want a surgeon operating on you who just learned how to do one surgery. He doesn't have an understanding of anatomy, for example. He knows how to cut the heart open and do one thing, but he never learned biochemistry, physiology, or anatomy. You wouldn't want that, would you? So it's very much the same with trading. You need to understand, if you're using price action, if you're reading charts, you have to understand how to read the charts first, and then you can develop your strategy that fits your personality and lifestyle, not someone else's, your own. You can use someone else's strategy and make it fit, if it fits you. Does that make sense, everyone? Anyway, so ask yourself this question. If what you're doing is chasing after strategies and they're not working for you, they seem to be working because they probably do work for the people that are trading them, but why don't they seem to be working for you? Well, this could be the reason. They don't fit your personality and lifestyle, and you don't have the foundation on which they're built. So take a step back, get the foundations, and then you can start moving forward again. You don't want to build a beautiful structure, a beautiful building without having foundations first. The whole thing will fall down. It might look nice for a bit, but it's not going to stand the test of time. And that's the key. You want to develop your trading in a way that has foundations, that is strong, that will help you grow and continue to grow. This is how you do it. Now, let's go on to reading market tops and bottoms, and we're going to use this foundation now. So the most important thing that you need to ask yourself is, where is price and what is price structure telling us? Remember, where is price is all about location. I'm going to teach you now the three main formations. We're not going to be covering gaps. Gaps are pretty important. Gaps happen when there's a discontinuation in trading usually, and there's a buildup of orders on the buy or sell side, and the market opens, or the market makers open up or down from what the previous close was. That's what causes gaps. Now, it's very important to always keep yourself on the right side of the market so that you can catch major turning points. And we can do this time and time again. You need to be able to see it as it's happening, not after it's happened. After it's happened, anyone can look at the market afterwards. You need to be able to read it as it's playing out, and I'm going to teach you how to do that. So there's three formations. One I call the most common formation because it happens most of the time, and then we have a basing formation and a climactic formation. Okay, you can start taking notes if you wish. So let's go over the most common formation. Again, we need to ask ourselves location. Where are we? So price needs to be at a significant level of supply and demand. So you need to know what that looks like. And I'm going to show you some examples soon. Or a new high or low, as in a completely new high or low. The markets like the E-minis or the markets they made new highs today. So that is a new high. The market's never been there before. Or it's at a significant level of supply and demand. Now you need to look at what the price structure is telling you. So you're in the right location now. Now, what does price structure tell you? We need to look for something called change of trend. Now, we use pivot analysis to identify when the trend has changed. I'm going to show you an example of this most common formation. This is when Bitcoin was making all-time highs here. So we've got the market making all-time highs. And if you come down here on the weekly chart, it's a monthly chart, you can see here, the market made a high and then it broke below this pivot. This is what I call a change of trend. Once the market trades under the previous pivot low over here, over there, then that is now a change of trend. And look what happened after. That's telling you we came off the highs, the market's changed trends. We're going to move, highly likely, you don't know 100%, but it's highly likely that the market's going to move to the downside. Let me show you another example. This is the dollar index, and this was the low of the dollar. I'm going to show you this in the charts shortly. This is a higher low, and the market, this is also a reversal bar. This is, once this bar closes, that's the end of the move down. I called this market live at the Bogu Investment Forum when I spoke. I said, this is probably going to end up being, and if you look left, there's also a key level as well. Now, if we look back at the markets now, I'll show you the live markets on the dollar index. You will see, if we look on the monthly chart, look what the market did. This is the lows over here, and you can see what happens. I'll show you how it works. Market's moving down over here. Now, we watch each bar. Market moves up. Now, you could say, this could be the bottom, but I don't know for sure yet because the trend is still down. Market comes down again. And then look what happens. Market turns. Now I know this is the bottom and the market's going to start moving up. Look what happens afterwards. Okay, we struggle over here. It doesn't matter. This is the bottom of the market. You can say that, highly likely. And then look what happens. The market goes up and away. Imagine if you could catch these and just hold again for quite a number. I mean, you would have, if you would have known this, and we've had people in our trading room that took trades based on this and held them for multiple years. And again, in the Forex market, what you can do if you're holding currency, the way that you could trade it, for example, if you're, you know, say, for example, live in a different country, for say somewhere in Europe, and you're holding euros in your bank account, if you see that the dollar's about to move up, you can move and hold your currency in euros and hold them. And why hold them in a currency that's going to start moving up against your currency, so that you're not hit by the exchange rate change. And this would be better, wouldn't it, if the dollar's going up against the euro, for example, to be holding dollars as opposed to holding euros. Okay, just an idea. This is what we can do. These are long-term trades. Okay, we do the same thing on the short time frames as well. So this was the bottom. Look at the move to the upside. Okay, so that was, I mean, you can see when we took the picture of this, we pointed this out again. We run a live trading room. I'm going to share with you how you can come and join for free and check it out. And also how you can learn how to spot changes of trend by learning how to read the trend as well. And then you can come to the trading room armed with that knowledge and watch us do this on a day-to-day basis. Now, I can also show you October 22. Let's go back to the dollar index on the weekly chart. This is October 22. We do the same thing. We just did a market bottom. Now, watch this. Look at this beautiful trend. This is the market going up. How do I know the market's finished going up? I don't guess it. I wait until the market's told me. Once the market does this and takes out this pivot over here, and it's coming off the highs, that's a change of trend. I want to now sell the next move to the upside. Now look what happens. The market moves up. Look at that. The next month, the next week, right up here. If you've got an entry here, look at your risk, and your reward potentially is taking it all the way back down again. Look what happens next. You get the biggest week to the downside. So if you could get in over here, you can get in on the following week, and look, we already changed trends. This is the key, and they're at key locations at new highs and off the lows. And look at the big move. The market's telling you, you're right. You got it on. You read it right. There were people over here who were saying, oh, we're going up and taking out the highs. No way. Highly unlikely. The odds are very much more to the other direction. And then you can see what happens. The market went down and down until, as you know, until we got to a key level and then moved up. And then this is where we are at the moment. You can see where we are at the moment. Where's the market likely to go? We're still moving down. You know, if we look at more local, the same thing here. This is the market. This is the market moving up. Look what happens here. The market gapped down and moved up and put in a lower high and down. This is the market top. Once this bar's closed, or once we go even below here, we're done. You're not buying this, you're selling this move up. Look what happened. Big move down again here. Big move down. So we hit demand, and then this is a bit trickier. And then, you know, because we're in a key level here, and you can see the market this week, we gapped up and sold off. Okay, so let's go over another formation, the basing formation. So again, ask yourself location, where are you? Price has to be at a significant level of supply and demand, price at new highs or new lows, and then we need price structure. So firstly, it needs to be basing at the highs or lows, followed by what I call a bull or bear trap. That's usually where people, you know, when it breaks out to new highs and then reverses. So I'm going to show you an example, or breaks down to new lows and then reverses. This traps people in on the wrong side of the market. How do I know? Because I used to be on the wrong side of the market, and then I used to get stopped out, and then the market used to reverse in the direction I wanted it. And I'm like, oh, so how about I wait for it to shake everyone out, like it used to shake me out, and then get in after that? So that's how I trade it now. I'll show you an example. So instead of trying to guess the high here, yeah, because it hasn't formed a high, I mean, it's basing at the high, wait for the market to break out and then reverse. Once it does, this is the trap. The trap's set when the market breaks out to new highs and reverses, and look at the market move down. And then you have the same thing again. You put in the higher low and move up, and that's the end of the market move to the downside. I can show you February 23 on the monthly chart of the February 23 on the monthly chart. Let's have a look at it. Let's look at the E-minutes. Okay, I want to show you this. So the market is having this is the market highs. The market's making lower high, lower low, lower high. We're going down. Okay. Now, how do I know this market's finished going down? We're going up again. So let's watch it. The trend's still down. Let's wait for the change of trend. So here's your lower high. There's your change of trend. When this happened, see this bar? Take out this one. Doesn't look like that for someone who doesn't know how to read this properly, but this is now the market bottom, and I know that the market's highly likely going to continue to the upside. So let's see what happens afterwards. It pulls back, gives you an entry if you want it. Remember, it's a monthly chart, and it starts to move up, and then look at the move we get from there. Get another pullback, giving you another entry after over here, and then look, reversal bar, and then we take out the highs and keep going until, as you know, you can see what's happening now. So from here, imagine if you knew and you could buy here, look what the market did. And then also we saw this, the market making, you know, selling off here on the lower time frame. Again, on the weekly chart, we saw this happening over here. When the market broke trend here on this bar, we said it's a sell now. That's the top of the market. So look what happens. Big move down, and then we put in a higher low. We know the market's going to take out the highs. We already said that. If you're in our trading room, we said, you know what, buying pullbacks all the time to reference points on the smaller time frames, and we're going to break the highs. And we did that today, funny enough. So today was a buy at the high. In this case, we're buying after a pullback. Okay, so let's go. So this is a bull trap scenario. Now, and I just showed you how to use this to spot the bottom of the market in February 23. And we also used it to spot the top of the market and the bottom of the market just now as well. So let's go through climactic formation. What does that look like? Again, ask yourself the same thing. Location. You know, you have to have the right thing happening in the right location, also at the right time as well. So you need price at a significant level of supply demand after a rapid move, which we call an acceleration in price, momentum move, and price or price at new highs or lows after a rapid move or an acceleration in price. And then what we're looking for is the price structure. We're looking for, again, change of trend. So how do we use this? Again, you don't need to guess the market, but people try to catch market tops and bottoms. Well, we do that pretty accurately because the market tells us it's finished going down or finished going up. So how do we know that? So let's show you an example. This was an oil, actually one of the contracts of oil. This is when oil went to negative territory. You can see it went, I mean, this is a continuous contract, but it went, in one of the contracts, it actually went to negative territory. If you guys remember in this year, the market sells off. So how do I know this is the bottom? Well, on this time frame, when the market has a change of trend over here, I know that's the bottom. And then we know what happened to oil. Oil went all up to all-time highs here. So once you know how to pick this, you don't have to guess and try and catch it as it's falling. Just wait for it to stop falling and turn and then catch it. So you don't get the exact high and low, but you get most of it on the bigger time frames. I'll give you another example. This is the pound. And you can see that, remember, this was a big red bar, rapid move down, big red bar, and then it comes back. And what happens here? When this bar closes, we get a higher low. It's a change of trend. And look what happens afterwards. We get a big move to the upside. And we have some of our traders in here who were buying down here. You see, look at this month. If you bought on this month, it went pretty much straight up. And then again, and then we had a pullback, so you get in more on the pullbacks. If you're trading on the bigger time frames, you wait on the smaller time frames to add to your trade. You can get out some, add to the trade. And we've had some people in the trading room that are following this as it's playing out over the months, and they're doing really well. They're putting on trades over here. They're taking off partials, adding back on, and they're not doing it on a day-to-day basis. They're holding trades for like a few months and then taking something off and then waiting for a month to add back on again on the pullbacks. Again, whatever you do on the day trading timeframes, on the smaller, you can do on the big timeframes as well. And then you can go for much bigger moves. Obviously, if you're adding to a trade, you're already in a position that you probably have no risk on the trade anymore. There's a way of adding to the trades without ever increasing your risk. So you can actually increase your profitability without ever increasing your original risk. And again, we teach that in our training, how to go about doing that. Isn't that cool? It sounds like, how do you do that? How can you ever increase your profitability on a trade without ever increasing your risk? Well, you can. So let me show you a climatic formation. This is multiple time frame analysis, what this stands for. So if we look on the Australian dollar on the monthly chart, again, we have a rapid move to the downside to a key level. Now, again, if you want, you can try and catch off the level, but you've got no idea if it's going to keep going if you buy it here. I mean, but how do you know? So we go down to a lower time frame, the daily chart. This is a monthly chart, daily chart, and we see there's a lower high. When this market spikes above here, that's a change of trend. I know now that the market's likely to go up. So you can see the next bar, it dips down, giving you an entry here. If you're not sure about that, then wait for the market to close above and then buy the pullback over here. And then you get this move. See that? You have to be patient. This takes a number of days. But you know now the market's no longer going down. It's finished the downward motion. And you can see the proof is what happens afterwards. If you can read this as it's happening in the market, then you're going to be ahead of most people. So we've got a little bit of time. Let's have a look at, if you want to type in the chat area what markets you want to look at. If you want, we can look at the markets today. And you can see, again, interesting. These are all the key levels. These are all marked out ahead of time. And you can see, look where this was a key level where the market dropped down to. And again, this is a key level as well. Look what happened just now. The market gapped down to right into these are my supply and demand zones. And this is not a sell anymore here. This is not a sell. You don't want to sell the highs. This is what I call V-shaped pattern. When it's basing at the highs, it means it's going to break to the highs. You can see this is one of the biggest drops in the history of the market, and this is one of the biggest rallies in the history of the market. If you compare it to, the COVID drop, it pales in significance. I mean, this is COVID drop. Look at this drop. It's much bigger, much bigger. And an immediate bounce back, just like we did here. Down, an immediate bounce back. This came down to a key reference point as well. Look at that. Big sell-off, and then bounce back, and off you go to new highs. And then we get this pullback, and then again over here, as we pointed out, this was where you want to be starting to go long again. And here on the smaller time frames on the weekly chart, you can see the market top and market top and the market bottom over here as well. Let's have a look. Okay. So let's look at a few other markets. Let's look at gold. Another interesting one that we've been following for quite some time. And again, let's look at it on the bigger time frame. And we've also caught every major turning point in gold. But look how beautiful this move is here. This is an uptrend, and we're kind of a bit choppy here at the highs. This is all-time highs. But look at this. If you would have bought here, how do you know that this market is? I mean, if we go here, market's going up. So and then we start to pull back. I don't know if it's going to go down, but look, the market bounced back. Now look at the next bar. Now we've got a pivot here. So this is telling me the market's likely going to continue going higher. So this is what you should do for yourself. When you see this as it's playing out, remember it's a monthly chart. This month closes. Now have a look at the chart, write down some notes for yourself. This is the only way to do it. And then say, what do you think is going to happen here? Based on what? Say what your reasoning is. And again, if you've got a framework for reading the market in terms of supply, demand, trend, and price direction, then you can have a look at this. So if we look at it in terms of trend, we're pointing, the trend's going up. It's an uptrend. In terms of supply and demand, I don't know. We're somewhere in between. This could end up being demand. It's a pivot, but it hasn't pushed a new, it's not a significant level until we take out the highs. Otherwise, and if we break below here, I know this is going lower. So there's your line in the sand. Now look what happens. The market immediately goes up and takes out the high. Higher low, higher high. So now I know I'm in upward. I'm in upward motion anyway, and the market's going to continue. There's no way it's going down. So if you saw this, the next month you want to be on the buy side, buy side, buy side. And now we're getting, you can watch the smaller time frames. You can see what's going on. We're getting a bit choppy on the smaller time frames, as you can see here. But we know where the key levels are. Okay, let's look at one more market. Let's look at, actually oil's been particularly interesting, but let's look at Bitcoin. Bitcoin exactly the same, and look how beautiful this is. And I'll show you exactly what we just talked about. The market's basing here. Market breaks to new highs and then comes in. So I know now the market's likely going to be going to the downside, and then we gap down. So where is the market going? So we marked out the level. This is a base here. I know this base is going to break to the upside because of this bar. And this was where we talked about buying over here to break. And look at the move. Now again, there's people in our room that are buying Bitcoin down here, and we've had many other different places, but we said now Bitcoin's going down. Where do you want to be on the buy side? We said here at around 75,000. Don't buy it anywhere else. The market is going down here, and this is where you want to engage it on the long side. Nowhere else. It's already told you the market's topped out here. It's going to pull back. Where's the next reference point? Down here. So let's see what happens. And again, we do this as it's happening, before it's happened. Actually tell you in the trading room what the market's likely to do, and you see it for yourself as it plays out, and you're like, again and again and again, we're pretty spot on most of the time. And you have the reasoning, and in our trading room, we give the reasoning ahead of time, so you know exactly, not after it's happened, as it's happening. As it sets up, we said the market's highly likely going down here, and you want to be on the buy side down here, because it's a bullish market. So let's see what happens. Where does the market go? You see we have opportunity now. The market here and here, and you see both of these weeks the market went down and closed down here. You had two opportunities to sell with a small risk, but you're not buying until you get down here. So again, you're not buying this, it's not ready yet. It might, go up, but it has to get to this level. Okay, we've got a gap here, so we're going off the gap. But to buy, to take out the highs, you want to make sure you're in this level. So see what happens. Market comes up, lower high, down, we hit this level. This is where you want to buy. And look what happens after that. Look, we take out, we break the trend here. You already know once you take this level, we're going higher. And this is where you can see, and we took out the highs. Isn't that beautiful? And now, this is your reference point to buy. Don't buy here. This is the market top for now, so we're going down. This is the lower high, lower low. The market gap down this week. It's a buy. It gapped down again to a reference point. And you can see what happened this week. Look at the move from here, up. Up, and you had another opportunity. You missed it. You got an opportunity to get in at the lows here again and just take it back. Okay, so let me share with you a trader success story. And it's a beautiful story, actually. So Jane came to me, and within 3 months, she had no previous training in the markets, no financial background or anything like that, beginning to consistent profits in 3 months. Fast forward to today, she's now training other traders how to trade NQ at the cash open, has her own Discord channel and training, teaching people. And we now have quite a number of successful traders in there that you can actually, if you ever join her training, you can see that. And she learned the foundation and then went on to specialize in trading NQ at the cash open. This is what she said about my training. All I can say to anyone who wants to consistently profit, just do it. That training turned my whole trading around. From that day on, my trading has been so consistent. It's really mind-blowing. Once you understand the levels and can read the trend, you will beat the market every single day. However, the key is follow the pivot analysis, use the demand and supply levels, and adapt it to your own trading style. Be very disciplined. Don't be greedy. Start when you've made your daily profit, and you will turn losing trades into winning consistently day in and day out. Simon's training can be adapted to any market. She mainly trades the NQ. Use my own strategy based on Simon's education. I found the best thing was knowing what you were doing gives you confidence in your trades, and the fear of losing was gone. Trading had become a lifestyle, no longer a binary gamble or a nervous hope job. Believe me, it's the best and the only trading to succeed with. That's what Norman said. Having been duped in the past to purchase useless courses, I'd been reluctant to take the plunge. But having seen Jane trade and indeed having spoken with you, I was satisfied that I was dealing with genuine people and not the charlatans who dominate the online educational space. I was not disappointed. The course was far and away the best online trading education I've experienced. My congratulations to you both on the course and your sincere efforts to advance your members' trading skills. So remember, the best investment you can make in life is in yourself. As Jim Rohn says, for things to change, you have to change. For things to get better, you have to get better. But let your knowledge lead to action. Doing nothing is not going to get you anywhere. You have to take massive action. So now's the time to think about the action that you want to take. So now you've seen a simple and powerful approach to picking market tops and bottoms. Is it okay if I show you an offer I put together to help you know exactly what to do to achieve mastery of the trend? And you can use that in its entirety to pick market tops and bottoms and to actually trade in the direction of the trend. So now's the time to take it a step further and learn how to read the trend using pivot analysis. So what are the benefits? Trade in the direction of the trend. Remember, the trend is your friend until the bend in the end. That's where usually it reaches supply and demand, or the trend actually changes like I've showed you. Know when a trend begins and ends. Make sure you're never fighting the trend and make sure you're on the right side of the market. From there, you can develop a profitable trading strategy or enhance an existing trading strategy. So here's my offer to all of you here. Join my How to Read the Trend training session and also come and join us in the live trading room. And this is what you're going to learn. You're going to learn how to identify the current trend of the market, to analyze a trend in multiple time frames. So how do you do that? Exactly when a trend begins and ends, and how this knowledge will dramatically affect your bottom line. And you'll be able to watch us analyze and trade the live markets in real time on a day-to-day basis. So here's what people are saying. Ernest, Simon, this is phenomenal. I've been trading, studying for 3 years. Sadly, it's all been the wrong process. I've wasted tons of money, time, and effort. I've actually deleted all of those programs, indicators, etc., and now completely focus on what I've learned from your program. It's the only real way to trade, and it makes complete sense. Tom, I wanted to say, I think what you teach in How to Read the Trend training course is brilliant. Before that, I'd picked up bits and pieces from different traders, but it was never joined up. Your course brought it all together in a very structured and algorithmic way. No guessing needed. The facts jump off the chart. Matt, the trading room is very helpful in understanding how to go through the process. I've been trading for 11 years, and I love how, and have not seen anything like what you do. I love how simple it is. I mainly trade options that trade with trades that last for 30 to 60 days. I've been looking for something that I could use to day trade for 2 years now. I want to round out what I'm doing with another source of profits. I've not been able to find anything I could execute consistently. Just paper trading with your system. I've been doing it for a couple of weeks now, and I've had far better results than anything I've ever tried. So this is what you get. It's about an hour and a half, and the regular cost is $497. It's on demand. You can watch it as many times as you want. You also get personal access to me. You can ask any questions you want and follow up email, or you can actually ask in the live trading room, and we can go through your questions live. The live trading room monthly access is usually $497 a month, and you also get access to online trading community 24/7 via our Discord server, and this is what it looks like. So here's the offer for everyone here. Join now. The regular price is $994. The deadline is 2 days from now. So you'll receive $497 off. So basically only $497, and you get the live trading room as well. So you can learn something and then come and see it in practice and actually watch how we do it. So you'll learn something and be able to put it in practice immediately. So this is the link to go to. So if you type this into your browser, tradesmartforex.com/promo. And I'll show you quickly what that brings you to. So you come to a page over here. And if you click on buy now, it brings you to the checkout. And I want to point your attention to the fact that it says monthly, but you can cancel at any time. It's basically a monthly fee, but again, you can cancel immediately if you want. You'll still get access to How to Read the Trend and the trading room for a whole month. And if you want to continue with the trading room afterwards, then do nothing and just continue. This is our portal that you can come into, and you can get access to it. Once you sign up, you'll get emailed your login credentials. You can get in through members over here, which will bring you to this. And then How to Read the Trend is session 1 of How to Read the Market Professionally. It's a standalone session. This is your access. How to join the Discord is over here. And the trading room, we have a weekly preparation session, which you can come and join live. We do that on Sunday, where we prepare ahead of time for the whole week. And then the daily sessions, they're all recorded, so you can watch the latest one if you miss it, and the schedule and everything, and the link to get into the live trading room is in here. So this is the offer. So How to Read the Trend is $497. 1 month in the live trading room is $497, a total of $994. This is the link, tradesmartforex.com with the number 4/promo. And again, you only pay $497. I've showed you how to go through the checkout. If what you heard here is resonating with you and you want to take it a step further and actually come and join our trading community, then now is your chance. So I'll be looking forward to welcoming you. For those of you who joined already, welcome. If you have any questions, feel free to, you can type them in the chat area now. We've got about 2 minutes or so. If you have any questions that you don't want to ask right now, you can email me, simon@tradesmartforex.com. At this point, I want to say a huge thank you to Traders Corner for organizing this. When I first started trading, which was over 20 years ago, there wasn't anything like this. There was almost no trading education. The internet wasn't what it was now, or what it is now, and things are changing, so which is great. So I want to say a huge thank you for attending. I have a YouTube channel. You can join here or via the website. And again, this is a link to join the training. So thank you so much, everyone, for listening. And for those of you watching the replay, thanks for listening. Hope you gained something of value. And again, go through it again, write yourself notes, start to put it into practice, start to see it for yourself. And if you're ready to take the next step, we're ready to welcome you into our trading community. So thanks a lot, everyone.
Hey, Simon, if there's anything else additional you want to show our followers, you can do so, because our next guest is stuck in traffic and she's not going to make it till about 1, I guess. So if there's anything else additional you want to go over with your traders or whatever, I'm going to put your YouTube in the chat link right now as well.
And you can put, if you put this link, if anyone
Yeah, I did.
has any questions, and
I put
we can
that.
go through the live markets if you know. I'm happy to do that for a few more minutes or so.
Yeah, go for it.
So anyone have any questions about anything to do with trading? Feel free. We can jump into the live markets.
Yeah, guys, this is your opportunity to take advantage of someone who's really great at what they do. So please ask questions, and I'll stop talking.
For those of you who joined already, welcome. That's great. Okay, so I'm gonna look at your questions. So again, feel free to type any questions that you may have, and I'll be happy to. Let's have a look. I don't see any questions coming in. Do you guys see anything?
No, sorry, I don't see any questions either. I just put your YouTube in there, but people really should. Oh, wait, now someone else is. Looks like there's a
Okay.
question. Do you see that? Yeah.
Yeah. Things learn the hard way. Yeah. Using indicators, learn the hard way. Getting caught on the wrong side of trades many times and then going back and figuring out how, this the only way to do it is by the way, is by journaling, logging your trades, writing notes. Give you an example. This is another example of the dollar. When the dollar broke out here, this is a bull trap scenario, breaking out into supply. The market comes back in. I know when this happens, the market's going to break below the base most of the time. You can see where we got to. You see, we came back, we have an extent, this is what I call extended moves below demand. You get the snapback move, and you want to be selling this move up to the next level down, which is over here, which is what we've got happening this month. So this is not a buy, this is a bearish market. If the market would have closed back in here, then we've got another thing going on. So you can see the market base, this is a base. Market breaks out here, you see this? Breaks out, doesn't close above and comes in. So I know the next move is up, not down, because we didn't close into the base, we closed in the top part of the base. Whereas over here, if you see, here I don't know yet, but when this bar closes, I know we're going down. So these are understanding, again, I've got a training that I've been putting together for the past 10 years on trading bases, because I love what happens in the market basis. How do you trade them? How do you know, for example, you've got to know how to read it and then understand what the market's telling you so you can actually trade it confidently. And that's the key, to trade when you know what you're doing, as opposed to trade when you're kind of trying to make money. Don't ever try to make money when you're trading. Focus on the process of what you need to go through. Focus on the person you need to become to be that trader that's making consistent profits in the markets. You don't start there. You have to go, and again, some people get there, like I share with you, some people get there quicker than others because they go through the process quicker. And some people get stuck. They go off track and sometimes go round and round in circles and never get there, because they're repeating the same thing, the same mistakes, and they've got no idea what they're doing wrong. You need to have some feedback mechanism so you can make changes over time so that you can improve. That makes sense. So yes, you learn through experience, but you want to be able to learn from that experience and make changes. If you keep doing the same thing again and again, you'll get the same results and you'll never get anywhere. And you'll be like people, I've had people that I've coached over the years that have been trading for over 20, 30 years and they're still not successful. They've done every single course possible out there. And, to finally, when they come to me and they say, I need your help. And then you work with them and you kind of make things easier for them and get them to focus on, one thing. And then build a trading plan and then go through testing it and then, trade their own plan, not someone else's, their own. Then they start to get the results. Because you need a feedback mechanism. You have to know what's working for you or not. You don't want to come to the market and randomly stab the market every day hoping you're going to make money. It's not going to work like that. You need to have a methodology. And this is stage one, is having a framework for reading the market. And then remember, I've used this framework over time. The market's taught me how to trade once I understood how to use price direction, the pivot analysis, Understanding basis. I mean, again, how do I understand basis? By watching the market over 20 years, you know, by seeing this sort of thing and then seeing it thousands and thousands of times over the years, and then having notes on these setups, and then actually taking snapshots of the market and saying, well, what happened here? What did I do wrong here? You know, I used to buy here and then get stopped out. I'm like, what's going on? Maybe I should be selling here. It's a breakout. Oh, well, most breakouts fail. But the ones that work are big, yeah, but understanding which ones are going to work and which ones not, what does it look like? So if you have a framework for reading the market, you can do that, and you want to keep it simple. If you have to make, you know, go through a checklist of 100 things before you take a trade, you know, especially for day trading, it's too much, too complicated. You want to keep it simple. That's the key. Okay, let's have a look and see what other questions we have there. Any free trial? Yeah, I mean, the key is it's best to come and do how to read the trend. Do you know how many people I've had you know, I've had some people come in to my trading room that are world-renowned traders, believe it or not, and they trade their own accounts from home. They were partners in major banking firms that you probably know, head traders that have come in just to see what I'm doing in supply and demand. This training is exactly the same training I've given to professional traders that work at some of the top institutions. I don't do that anymore, but I did do way back when. So it's a good idea. And basically the first month in the trading room is free. The other way you can do it is you can go to my website if you wish, and you can come and have a trial. Let me show you. If you come over here and you go to services and go to live trading room, if you do start trial, each of the, you can see it's $497 a month, but you've got a chance to come in for 2 weeks for $127. Now, the reason why there's a cost for it is because if there isn't, you won't take it seriously. It's more for you than for me. I know that if you've got some skin in the game, you're gonna, you know, it's like if you buy a course and it costs you $10, you're not gonna put any serious time, but it costs you $10,000, yeah? You're gonna put the time and effort in, you're gonna make sure you get your money's worth, if you see what I mean. And so it's better for you. And, you know, the other way to do it is what I offered now is $497 for how to read the trend, which is session 1 of how to read the market professionally. That alone is super valuable because you'll see how we read the trend using just the candlesticks. I've showed you a few examples of using it to pick market tops and bottoms. But again, if you want, just come and check out the trading room. And again, you know, yeah, so let's have a look what else. The hours of the trading room. So we run usually from 7:30 a.m. Eastern time, more recently about 7:45. And if we look at that's one of the times where the Forex markets and also, you know, that's where the US market opens. All the Forex markets, also the futures markets, the open times, I mean, mostly in the Forex markets, are 8 a.m. local time in whatever country you're in, whatever region you're in. So 8 a.m. local time in you know, in Asia, for example, is where the Asia market opens. So 8 a.m. London time, which is 3 a.m. Eastern time, US time on the East Coast, is where you'll see a lot of, if you look at the markets, you'll see a lot of action happening around those times. I'll show you an example. So not all the time, but many times. So you'll see that a lot of the moves start from 8 o'clock. This is 8 o'clock. This is London, this is US. And you see a lot of the other moves at 3 o'clock over here is the London move, US move, and the Asian move is in the overnight, kind of overnight session for people in the US. You see a lot of the big moves, sometimes you get the afternoon, but if you look at a lot of the big moves over time, you'll see, for example, this is the US session and nothing much happening in the London session, it's kind of sideways. So you'll see a lot of times if you go over here is the London session. This is the European sessions at 2, it's an hour before London, and the London session, not much happening. So again, it depends on the market. The market is kind of sideways, it was pretty much sideways, but we've had big moves, and if you go back in time, you'll see a lot of the big moves happening off major, like here's London. Look at this, kicked off this move, and it continued here. This is a London move, pause, US continue. So you see that 8 a.m. and this is 8 a.m. in London. Yeah. So a lot of the big moves happen around those times. So that's why we usually trade the US session, and you also have movement in all of the futures markets around that time as well. Any special indicator? No, just I mean, I don't really use it. I've got one indicator here. That's just because I've used to having it on my chart. I use it for 1% of my trading, like 1 out of 100 trades, maybe. I almost don't use it anymore, but I still have it on because I use it for a certain type of base trading on to time entries on the lower time frames. But most of the time, I'm just reading what the market's doing based on. And you can see it here. How do we know? Let's just look at what's just recently happened in the market, like just now. So if you look at this level, and you can see what's happening here, let's go and let's put this into practice. So you see, market's moving down here. Yeah, it kind of bases move down. How do I know what's going to happen next? So you see, there's a higher low. So what the odds here? The odds here, if the market holds this level, we're going to take out this level and start moving up again. So let's see what happens next. Woo. See, just by reading the pivots, see that? Look, and being in the right level. It's coming off the lows, change of trend, and again, this works on every time frame. And look at that. This is what's happening just now. And now we take out the base. You have to understand how that works as well. So there's another buy here, and the buy also here down at this level on the dip. And then you see we're off the highs. Now we're going to see what happens here. It's going to pull back now. There's nothing to stop it unless we pivot and then push up again. So if you look at the higher, we're in a supply area. We're into supply area here. So
yeah, Simon, our guest got here. Thank you so much.
Okay, perfect.
Yeah, I appreciate
it. The extra time.
Thank you.
Okay. Anyway, those joining, look forward to welcoming you. Yeah. So yeah, thanks a lot, and speak soon.
Thank you, Simon. Outstanding insights, Simon. Those top and bottom formations are absolute gold, especially in this type of market. And traders, Simon has a powerful offer for attendees. The link is live now in the chat. If you want to trade with momentum and power, Melissa Armo is your go-to expert. She's the founder of the stock Swoosh, and she's going to walk us through short stocks for fast profits using her proven golden gap method. Melissa will show you how to identify stocks with institutional volume, the kind that moves big and fast, and how to capture gains from just one solid pick per day. Let's welcome Melissa.
Testing. Can you hear me?
I can hear you. Can the audience hear you?
Wonderful. Thanks so much for having me. I apologize for being late. I was on TV this morning and traffic in New York City is crazy and today, so I'm happy that I made it. For those of you that don't know what I do, I trade stocks and I also talk on television about the stock market, about the economy. So I'm a very busy person, but I enjoy trading. Specifically, I trade gaps, and that's what we're going to talk about today. If you have any questions as we're going along, you can plop it in the room and I will see. And again, we're going to talk about gaps today. Actually, we shorted Tesla. That was the trade of the day today, which I don't have in here, but if we have time, I can pull that up as well. Again, I appear on TV. I talk about the stock market. I talk about the economy, and I love doing both. Trading is fun, particularly shorting, which may seem unusual in this type of market, but again, we shorted Tesla today. Yesterday, we shorted BA. So even in a very bullish market that's making brand new all-time highs, we are shorting. If you have questions after today, you can email me at melissa@thestockswoosh.com. You can call me at 929-3200-GAP. And again, you can always follow me on YouTube. That's probably the best place to follow me, where I have lots of videos, my television hits, and then sometimes I post a live trading room as well. So it's summer. It's a great time actually to trade because we're having a lot of volatility. We're getting into, in about 2 weeks, the week after July 4th, it's going to be the beginning of earnings season. So we actually have about 6 weeks of earnings starting again the second week of July, where it's going to be extremely busy time to trade. And we also have volatility. If you've been following anything that's been happening with current events, we've had volatility with that as well. And I expect that will continue. And then obviously tariffs have been on tap for 2025. So there's lots of reasons that it's been some really good trading in 2025. And again, you can go long, you can short, you could do both. I prefer to short, and that's what we're going to talk about today. But specifically in any type of market, whether the market's strong or whether the market's weak, you should have a trading system that you can use and apply in any market. So as strange as it may sound, like I said, I'm looking to short weakness and make money to the downside, even in a bullish market, okay? And I will short stocks that are going up. I will short stocks that are down. I will short neutral. So again, I'm shorting the gap, which I'm going to talk about in a little bit. But again, right now, a lot of people that have been buying dips are making money if they're trading the QQQs or the SPY, because the market, again, is close to making new highs in the SPY and already did yesterday in the QQQs. But will the bullish market last? That's the question. I mean, that's the big question. There's a lot of different opinions on that as well. But what if we wouldn't, okay? What if something happens with the escalation with Iran? Something could change this market as strong as it is, and something can change the market very quickly overnight in a gap. And that's why it's important to have a strategy that you can use and apply and make money, again, in any market conditions, okay? So it is important to be aware of current events, things that are going on, things that are happening, because that's going to allow you then to take advantage of the opportunity of things that could happen where you obviously as one individual can profit, okay? So you do have to be aware of what's going on in the world. Now I put the results in here. I don't have today's trade or yesterday's trade in here, but this is through 6/23 on Monday. Our year-to-date results in the live trading room, 586,522. So I risk an average of around $4,000 per trade per day trade. Now when I'm saying day trades, I'm trading stocks on margin, okay? So I'm shorting the shares, getting in, get out. Now, I also do options, okay? I also do options, but I wanted to show you the stats, 63% win ratio year-to-date for the room, and the stats for the options newsletter. I'm risking more money in my options. I'm risking an average of around $8,000 per options trade, up over 2.4 million for the year, 69% win ratio. So I'm doing day trades and options, okay? And actually, I'm in a Tesla put. But again, one of the reasons I trade options is because I can capture an overnight move. Many people want to trade options because you don't need a margin account to trade options, or you could trade options in a retirement account. For me, the benefit really for options is to capture a larger move overnight, okay? So again, my system is based on gas, which we're going to talk about in a little bit, but you can day trade it or you could do options. And I just wanted to show you our stats for year to date. Again, we're almost halfway through the year. Monday is June 30th, so we're 6 months into the year, going strong, very strong start to this year. Again, we had a lot of opportunities to short early on in the year when we had that big sell-off, which a lot of it was based on tariffs. Again, will we have some more volatility like that going into the first, second week of July? It's going to depend on whether or not Trump pauses the tariffs again, or again, if we have something that happens with the war overseas and earnings season begins. So if you're here and you're thinking about trading, or maybe you're doing it already, you can trade the stock market, which is open every day from 9:30 to 4. You can trade it an hour a day, half an hour a day. We did Tesla. We were in and out very quick this morning in several minutes. It was less than 10 minutes. I was in and out of the trade. So even though I could theoretically trade all day, I don't. Okay. Again, I'm doing TV. I'm here with you with a webinar. I have another thing later today. I'm a busy person. I don't want to sit and stare at a screen all day for 6.5 hours. So if you're someone that has a lot of things going on and you're busy, you may not want to do that either. So if you can find one good pick, one good trade a day where you can take the trade, be in and out in a few minutes, that's really all you need, okay? That's really all you need. And it's so important to find the right pick and take it in the right direction, okay? And again, any questions? I have the questions up. I think I can see the questions. So you need the right tools to be successful. Okay, you need the right tools to be successful, and you need a good strategy. Okay, that's how you're going to get good results. Again, you need more winners than losers, and you also need some big winners. Okay, because you need to cover some of the losers with some of the winners. So you need to have some big winners too. And I developed a system, which is a rating system. And that is how I make my pick. And that is what I teach in a class that I teach once a month. I go through and I check the boxes and I go through a 26-point checklist each and every morning. I say if it rates 20 points or more, then I'm taking it in the direction of the gap. And again, this is something that's teachable, something that you can learn. This isn't like theorizing or you have to read all kinds of books or whatever. You're not purchasing a program that's automatically doing it for you. You're using your brain and thinking it through and actually going through the process and doing it. Now, here was when we did Monday. This was HINDS. We shorted this Monday. So first of all, let's talk about what is a gap, okay? A stock gaps when the closing price of one day at 4 o'clock, the market always closes at 4, and opens the next day at 9:30 at a different price. So this is a gap. So this was, again, on Friday, the 20th, HIMS closed up here, snug as a bug, around 64 and change. Gap down here the next morning around 48 something. Open, dropped, fell. I shorted this. In fact, where this went on the day, this came all the way down to like 43 or 42 something. I got out of that way before then, but again, this was a gap, okay? And it was a short. So my process is I'm trying to figure out if this gap, okay, this is before it even opens, I'm looking at it, I'm saying, well, is this gonna rally? Do I wanna go long this gap or do I wanna short it? And I figured it out, I applied my system, I said, oh, this is gonna sell off. It's gonna continue in the direction of the gap. And so we shorted it. So the entry was 46.78. Exit for me was 44.75. Nice move, 2,500 shares in and out, boom. Again, quick trade, easy trade, done. And I did not do an option this. I don't even know if there is puts in this. I didn't even look it up or what the volume is. But again, you could do a put if it's available if you didn't want to do the shares. But I shorted shares in this on margin and it fell. I haven't looked this up to see what this is doing today, but this was a nice gap. Okay, that was a nice gap on Monday. So again, what is a gap? The basics. A gap is the difference between the close and the open. So again, the stock market, the US stock market is closed on Saturdays and Sundays. So every night from the 4 o'clock close to the next day during the week, we have a gap. Stocks gap most every single day. Not every gap is a good gap or what I call a golden gap. I'm looking for the gaps that are predictable. And how do I do that? I use my rating system, okay? So this was BA, actually, this is a BA we did 2 weeks ago. Stock closed here, gap down, open, rallied, dropped. So this is a gap. Again, closed up here, this was the 11th, gap down on the 12th. Then it closed here green, closed up on the day on the 12th, gap down again the next day, the 13th, open, dropped. Came down here almost to 195, okay? So again, this was 2 weeks ago. So you could have shorted BA here. You could have bought a put, got in and out. You could have bought a put here, got out here on the drop, okay? So again, this was a gap down. This was a gap down, fell. So that was a nice one there. Again, the HINDS, just showing you again, reviewing what is a gap down, closed here, gap down, dropped, okay? So again, how do you make money in the market? You've got to get the direction right. If you're going long this, you're going to lose, okay? You have to be short this to win. That's the only way. And again, I'm looking every single morning to try to find something that has high odds. High odds of working. If I look at it and I say this has high odds of working, then I feel like I want to take the risk. If it doesn't have high odds of working, I don't want to do the trade at all. So again, it's about high odds versus gambling. Because a lot of people, when they're trading, they are gambling in today's market. You're seeing that more and more here now as the market's getting frothy, where people are trying to short it even at the highs, and then it fakes like it's lower, and then it's rallying more. Again, where we go in the next week, we have July 4th next week, and then we have earnings season the following week. But there's still a lot of things going on in the world that's creating activity every single day. So you have to be able to look at something and say, is this trade worth doing, or is it not worth doing? And again, I'm trying to put the odds in my favor, because if I feel like it's not worth doing, then I don't want to do it, okay? I don't want to risk my money. I mean, you may as well go on a vacation, do something else, okay? So again, I developed the system, the rating system, which is a very useful tool because I figure everything out before they open. So way before the stock market opens, way before 9:30, I am trying to figure out if I want to take the trade in the direction of the gap or not, okay? Or maybe I don't want to do anything. Maybe there's nothing to do that day. Maybe there's lots and lots of gaps, but nothing that's predictable. So it would be odd that something wouldn't gap. Like it'd be very, very rare for stock to close at 2201 and open the next day at 2201. While that could theoretically happen, most stocks end the market gap almost every single day, but it doesn't mean the gap's predictable or what I mean by playable, okay? So one of the biggest trades we had in the last month, and again, like I said, we did Tesla this morning, was Tesla back on June 5th. I don't know if anybody remembers this day. It seems like it was a long time ago, but it really wasn't. It was only a couple weeks ago. Stock closed here, gap down, and absolutely tanked. So again, the night before Tesla was around 331 somewhere and change. Gap down the next morning around 320-ish, and by the low of the day here was around 273 and change. The stock fell on this particular day, on the 5th, like 60 some dollars. This was a fabulous, fabulous short. Now we were already in puts in Tesla coming into the morning. We did more puts, and then we did a day trade here too. But this was the biggest short that we had in the last month, okay? So again, to get a bar that's $60 plus, it doesn't matter if you have 100 shares, 1,000 shares, you're gonna make a lot of money as far as risk to reward times the amount because of the move. So one of the reasons I like gaps, and particularly shorting, again, because you get bigger moves to the downside than you do to the upside. But one of the reasons I prefer to short as well is because you can get panic. Panic comes into a stock, comes into the market, whatever you're doing, and it just goes fast, big, and almost out of nowhere. And that is really what happened that particular day. Panic came in. Again, Trump and Musk were fighting, or whatever the case might be. This was, like I said, 3 weeks ago. It doesn't matter why. It gapped, okay, and it was a good gap. So again, it's what I call a golden gap. So we did the 6.5, we did a 300 puts that expired the 13th. Again, the stock low of the day was around 273. Just an absolutely ridiculous trade. Cost was 550, sold at 32, 482% return on investment. I did 17 contracts and made $45,050. I got in and out the same day. Again, I did this trade in the morning early, 10 minutes into the open, and this was before the news broke about them fighting. I just read the gap, okay? I read the gap. I had no idea they were going to be fighting that day. Now, what if you did 2 contracts? You could have made $5,300. You could have done 1. You could have risked $550 and made over 2,600 bucks. These are the types of trades that can just make your whole account when you get trades like this. Now, we don't get trades like this every day, but we do get trades like this on a month-over-month basis. And you've got to be looking at the right stocks. You've got to be looking at the right picks. And again, you've got to be looking at the right things. Now, I want to show you the one we did before the move, though. So we did the 330 puts on Wednesday. Again, going back to the chart. So here was the 4th. So this gapped here. We bought the 330 puts here, dropped, fell, came down, broke the strike, fell off a cliff. So again, we were in this here, continued, got the drop. So that was a higher strike. We were in it before that on 6.4. Again, another short, another gap. Oh, here's the chart. Here's the chart. This was a little bit more expensive though. This was a little bit more expensive. It was closer to the strike. The 300s I did, the stock was around 320 plus when we did that trade. So this was at the money. The other one was away from the money. That's why it was cheaper. But still it paid. Still it paid. So 1 contract was $12. 8 cost me $9,600, sold 358% return on investment. Again, this is taking it one day, getting out the next day. Again, one of the benefits I find with doing options is you can hold for overnights for larger moves. Many people don't want to do that. Again, you could have got out of this trade and made money the same day, but the bigger move was holding it for the follow through and the continuation. And 1 contract, you could have made $4,300, risking $1,200. Again, taking in the 4th, getting out the 5th. So if you were long, you lost in this trade, okay? And again, this is one of these things where you're trying to figure out the momentum, the direction, because it's not that complicated really when you think about it. If you want to make money trading, all you have to do is get in the right direction. Now with options, you do have to get the timing right. So you could say, well, I think this is going to drop. But if you do an options expiration, say for July 3rd, and the stock doesn't drop by that time, and if it drops, say, the following week, you're going to lose, okay? So you have to get the timing right for options too, plus the direction combined, which is where it comes in with the whole philosophy of what I'm saying about momentum. Momentum is so critical. So why do I like to short? Again, I like to short because of panic. You get bigger moves to the downside. Again, the market right now today is rallying. The SPY is trying to make brand new all-time highs. The banks are moving higher. JPM made new highs. But again, if something would happen and the market would start to sell off, it would happen like that. One sell-off day or one gap could wipe out all of today's rally, yesterday's, the last 2 weeks. And that is, again, the power of the gap, and then the power really of selling pressure and panic. Now, again, when something falls, you have shorts, okay? You had people shorting, like I was short Tesla, but you also had selling. You had selling, and you had big selling, institutional selling. I said this before, and I keep saying this, drilling into people, because you have to follow institutional money. If you're following institutional money, you're going to have a lot less losses than you're going to have if you're not. Retail traders, why they sometimes can temporarily move a stock, will not take hold of a stock if institutional money wants to come in and dump it or buy it, either way, whatever the case may be. So again, it's very interesting because we're in a time right now where we've never seen this many retail volume. So many people are trading. Again, you have futures trading overnight, then you have the gap in the morning, and then you obviously have funds. So everyone has a different opinion, like I said, where the economy is going in the next 6 months, where the Fed is whether the Fed's gonna drop rates twice this year, once or not at all, whether we'll go into recession. You have lots of people looking at bigger picture things. But for me, when I make a decision about a trade, I'm looking at the overall picture. I'm looking at the technical analysis. I'm looking at the gap, okay? Any questions here so far? How are we doing? Anthony, just let me know what time I have to talk to, because I know it was a little late. So anyways, how do I determine what the smart money is doing? Okay, I use my tools. It's my rating system, and it's based on, like I said, technical analysis and a gap. So what's my process? I get up in the morning, scan for gaps, find them, rate them, okay? Because you can't short every bearish gap. You can't go long every bullish gap. So I developed a method that the checklist tells me what to look for in the price of the stock. And yes, you have to use your brain. Your brain is your best asset. It's my best asset. You can use your brain to think about where this is going to happen. Again, you're stacking up all the odds in the favor of the move or against the move. So like, for example, if I rated something and it rated 15 points, I said, oh, I don't want to short this. This could rally, okay? It's not going to continue maybe in the direction of the gap if it gets a low rating. So again, I'm looking at something and using my brain to evaluate it, and I'm doing all this before the open. So I don't have to rush and trade on the fly and make a quick decision out of nowhere. I'm very thoughtful in what I'm doing in the morning ahead of time, okay? So again, I'm trading on the side of institutional money, looking for the momentum moves. I'm looking for big momentum and again, big money. So this is how I do it. And it really takes the guesswork out of your trading. And also if you're trying to trade the news. I mean, the other day, actually a couple of days ago, I forget, I think it was Monday. Yeah, it was Monday. The market opened lower, dropped big, flipped, rallied. It was all over the place. So again, if you're trying to trade Trump's tweets or the news, or you could be going crazy. You really, really could. You could be going long and short the same stock the same day, up, down, losing, all over the place. You have to look at something and say, I think this is what this is going to do. You assess the risk, you rate the gap, you put the trade on, you give it a chance to work. And again, it either wins or loses. And again, for the day trades, I'm doing them quick. For the options, I'm doing the weekly trades where I'm letting the trades play out. But in this type of market, if you're trying to trade the news, you're all over the place. And I think it's been part of the frustration this year, because things could fake one way and then flip. You know what I'm saying? Now, this is another one here we've been watching, and we've done a bunch of day trades, shorts, and puts in Apple too. Now, I'm going to go back. I'm going to go all the way back here to May. like a month ago. Stock closed here, gap down, open, dropped, fell. Closed here, gap down, fell, closed here, gap down, fell off a cliff. So we shorted, we got this move in Apple. So from the initial one over here, it was around 210. Okay, we're in the middle of, again, I'm going back, well, it's almost a month and a half. Going back to May 16th, within a week, the stock dropped 20 plus points. So again, we were able to capture this shorting, and you could have done puts, okay? So there was multiple gaps. So again, I'm focusing on institutional money, but I really designed my system when I started to trade, and I did a short, and I made a lot of money really quick. And again, you know, I decided I wanted to become a specialist in one specific strategy. So I developed a system to not only find the gap, but to short, okay? So reading is a skill. It's a skill that can be acquired through education. When you're reading a chart and you're trying to predict it, you're trying to say, I think this is gonna get a dump, it's gonna drop, or this is gonna rally, okay? You're developing a system, a method to look at it by using the system so that you can take the trade before the big move happens. Again, while theoretically, you know, Tesla dropped 60 points in that day, you could have shorted it in the middle of the day and made money. Ideally, to be in the day before the drop, or even right out of the gate, 5-10 minutes into the open, you're gonna get a much, much, much better entry than trying to chase something after the fact, okay? So I've just become an expert in reading price action, and all you need is live charts. You need live charts, you need live data, and I find a lot of people are jump up and down doing different things when they're trading, and they're looking for some you know, some quick thing that's going to make back all the money they ever lost from the market. It's not like that. It's really learning it, knowing it, understanding it, going back. You know, you evolve as a person when you get better over time as you're reading things. You know what I mean? And then you get better at predicting, you know, where something's going to go. And again, I'm not predicting the earnings like for a stock before they happen. Nike has earnings tonight. I don't know if I'm going to short it. I don't know if I'm going to go long it. I know it is earnings tonight. I know I'm going to watch it. Okay. Any questions? How's everyone doing? Anthony, I don't know if you can hear me. How long do I have to talk? I don't know if you're there. Any questions from anybody? I know I'm talking.
Hey, Melissa.
Yeah.
I was just gonna say till 1:40. Is that okay?
Yeah, that's fine. That's great. Thank you.
Okay. Yeah, you're welcome.
Perfect.
And yeah, everyone, please take advantage because Melissa was just on Fox News and she's on there a lot and she's really great at what she does. So ask questions. She's an expert. Thank you.
Thank you. Okay, so let's get back to talking about what I was saying about learning. First, you have to learn what to do. Don't risk your money willy-nilly in the market. Second, you should be following someone that knows what to do. Okay, you do and follow. Again, I showed you my stats at the beginning. Not every trade that I take wins. Some trades lose, but I have more winners and losers, and that's how you get ahead. The idea that you're going to take and find a system that has 100% winners just doesn't exist, okay? And again, we're going with the ebbs and flows of the market. There are definitely times where it's more advantageous to trade than others. So again, going into earnings season, the second weekend of July will be a more advantageous time to trade. Why? There's going to be a lot of moves, there's going to be a lot of earnings, and then we're also going to really see how tough this market is, how strong this market is, if it can withstand some stocks reporting earnings not so good. But, you know, the last earnings we had, because of the tariff situation, a lot of places didn't want to even give future forecasts because of tariffs. Guess what? None of that's been resolved. And now we're going into the next earnings season. So it's kind of interesting because, again, you think you know something's going to happen, and then all of a sudden it changes on a dime. One of the reasons that I like to do the fast trades is because it doesn't matter if things change in a dime. You could be in, make money in 5 minutes, get out. Like, again, I shorted Tesla today. I got in, got out. You don't have to worry about it then. Again, oh, you're like, oh, I'm done. It doesn't matter if there's a tweet. I'm already made my money for the day. So again, that's one of the reasons why I like the morning, why I like the fast trades. And then number 3, become an expert in one thing, very important, implement a winning mindset, trade daily with conviction and confidence. and you'll be set. You'll be set because, I mean, the confidence that you need sometimes to trade, to put on the risk, to make the real money that you want to make. If you want to do this, if this is something you want to be serious about and do for a living, you have to have a high level of confidence to do it and to get good. Because I think a lot of people, again, when they're trading, they are back and forth all the time, and it makes them, puts them in this mindset where they're in this fearful mindset, which really then it's tough for people to take a lot of risk. So for me, you know, again, I've been doing this for a long, long time, but I've only been doing gaps. You know, I've been trading for 17 years, but I've only ever been doing gaps the whole time. So I think trading education is important. And I think a lot of times people take one class, expect to know everything, or they learn something that doesn't work, and then they get down on trading education. You've got to learn what to do to become successful. It's like if someone said you were going to become a dentist and you never went to dental school. I mean, that's unrealistic. You have to learn. Same thing with any higher education you need in order to have a job where you're functional and you're successful in that particular career. And again, many people have a focus. You know, with trading, a lot of times people want to do all kinds of things. It's really not that different than being a doctor or a surgeon. The good people are the people that have a focus. Okay, you wouldn't go to an obstetrician, you know, for a heart transplant. Okay, so again, this idea of getting really good at one strategy, becoming a focus and an expert, if you take away nothing else from today, that piece of nugget you should take away from today. Because a lot of times people want to learn a plethora of information and they never really get good at anything, and then they wonder why they can't make a lot of money trading. Again, you have to get good at something. Okay, so number one, you need a winning strategy. For me, mine is gaps. So again, the basics of what is a gap. A stock gap from the opening price today is different than the closing price of yesterday's trading. A gap is a break in price action from one day to the next. So how am I doing this? I'm determining who is in control. If the bears are in control, you're going to make money shorting. If the bulls are in control, you got to be long. You got to be long. It's the only way you're going to make money. So again, you're determining who's in control. Like I said, we did this Apple. If you were long Apple here this week that we were shorting it, you lost. Okay, you lost. It dropped down 20 points. So you would have had to be short or done puts. Okay, again, sounds simplistic, but you got to get the direction right. So I developed a method where I rate the gap using a 26-point rating system of the daily chart. I do it everything in the pre-market. I'm set before the open. And if it rates 20 points or more, then I take the trade in the direction of the gap. Again, you could do it as a day trader, an option. I just, you know, I like holding options longer, and I think they're easier to manage. And I like to do my day trades because I'm in and out quickly. But overall, this checklist really helps guide me every day. It helps keep me steady. It helps keep me on track. It helps keep me focused. So I could do one trade in and out quick and done, make the money and walk away. Again, sitting all day trading for 6.5 hours, you're going to tend to give money back. You can't just keep being perfect for 6.5 hours a day. Unless the market's power trending or the stock's power trending in one direction all day, which is very, very rare, and the market hasn't done it actually since the day that we did the pause day. That was the last day that the market did a power trend day. So it's rare that stocks would go in power trends for all day or the market. But otherwise, you can't trade something all day, even in the same direction. Now, this day here that we're talking about was a power trend day to the downside for Tesla. Did I know that right out of the gate? No, I didn't know that. But at some point, once it started to go really big, I did see where it was going. And again, we were in the 300s when it opened here above 320 before the open. So I figured a week to get to 300. I had no idea at 940 that stock was going to go, 27 points through in the money the day that I did that at 940. I didn't know that. But when you take a trade, the momentum comes in and you again panic. Selling, it just pushes it. And when you're watching it, again, it's just like, oh my God, this is so easy to make money now. We're in it. It's just going really big. It's really easy to make a lot of money trading on the side of institutional money. It's really hard if you're against it. Like if you've ever been against it or in a trade where you're fighting it, like, you know what I mean? Like where you're down, you feel like you're fighting it, or if you're doubling down, if you tried to add to a losing trade where you feel like it's going to go, you're fighting it. That's just a bad place to be in. It's just a bad place to be in, and you're going to end up losing more. You know what I mean? Whereas if you're in the right direction with something, and institutional money is moving it, it's so easy. You don't even have to do anything. You just watch the money just go, and watch the options change go if you're in an option. So we were in this quite early though, I will say 6-2, 10:14 in the morning. We did the 335 puts. It expired 6-6. This cost $7. It was the biggest trade I've had in the last month. This was that day of the move. Again, I did not know this when I did this trade on 6-2, but I'm going to go back to the chart and tell you what happened. These weren't dirt cheap, but they were not that bad for Tesla at this price point. Made 757% return on investment because I was in this trade before that fifth sell-off, and I was in it early. I made 74,200. If you did 2, you could have made over 10 grand. Now, where was this trade and how did it transpire that I was in that day? Because I did it here. So the stock closed here, gap down. We did the trade here. This was 6-2. So again, we did it early in the morning, 10:14. We did the 335s. Okay, this was this day. I'm going all the way back. And I just did it for the week. So I did it for the 6th. So the 6th was Friday. The 5th was Thursday when it just had this crazy sell-off. Anyways, the trade was up, and then it bounced really quick, so I didn't get out. It was up. Looking back, if I had gotten out of the perfect point here at the low of the day, I don't even know what I would have been up, but I wouldn't have been up 100%, and I don't think I would have got out because of the fact that I had a week left, and I liked the gap. But anyways, I didn't even have time to get out. So it was up, then it was down, then it gapped up the next day, totally 100% went against me. The trade was green, the bar was green, the trade was down, because remember, I'm short here now, I was in a put. We're on to 6-3, 6-2, 6-3. Trade was down, dropped, fell, stayed with it. Again, I had to the 6, came, dropped, started to go, gapped down the next day, fell off a cliff. So again, people always say, well, how do you get these big trades? Because I'm already in it. I'm already in it when it happens, okay? And I didn't kill it. So sometimes a trade goes right away, boom. Like the day that we did these trades, it went right away. But sometimes a trade can take a little bit. And so again, that's why it's important not to oversize yourself. If you oversize yourself or risk too much, you'll tend to kill a trade if it goes against you, okay? Any questions about that? And again, this is where understanding what to do and having the right knowledge and information keeps you on track. So again, if you learn how to read the footprints of big position players before the momentum comes in, you can make money. Knowing how to read what institutional money looks like will help you become successful as a trader. And the benefit is that you can win big trading on this side of power. Very important because again, you want to do well. You're taking the time, you're taking the money, you're taking the energy to do this. You want to do well. And again, so 1, learning a winning strategy. 2, find a supportive mentor. I'm there for people. I call the trades in the morning, like I called Tesla today. I say where to get in, where to get out. I call the trades, I rate the gaps, I do the picks, I run the room. I teach the classes, I develop the system, I do it all. Having a person and a mentor to go to ask questions really helps you. If you don't have that, you're kind of hanging out in no man's land. And that's very difficult for people. People want to know why, they want to understand why. And again, I explain why on the chart, in the daily chart. I teach the checkpoints. I teach everything in the class, the entries and the exits, and I explain why this is this. You know what I mean? I say, well, this is going to fall because of this. And again, you do it yourself once you learn it, but the rating system helps me determine who's in control. It helps me determine who's in control. And remember, a big flow of money going in a certain direction is what moves the market, stocks, creates momentum, and sets the trend in charts. When you're looking for institutional money, you're really reading the side of power in a stock. You want to be on the side of the power in order for you to make money trading. Institutional money is in charge in the market and stocks at all times. At all times. And again, even if you think it's not, it is. So it's about focusing on quality. Maybe there's a day you don't do any trades, but that's better than losing. Again, this is one of the reasons when I take a good trade, I stop. I don't keep going after it, because again, you're just going to chop yourself up. Now, we were talking about that day. Here was the 6-5 day, the Tesla day. Now, I did a day trade here. So we did the puts, but I also did a day trade. Again, this is a day trade on margin. Stock closed here, gap down. We shorted it. 322.75, got out at 317.30. This went to 273 and like 273.12, I think, or something, which is crazy looking back. I had 1,800 shares of this. Again, I wrote out the puts, but I made $9,800 of the day trade here. Now, you have to have a margin account to do this. Again, I get in and out of the morning quick. I was done, but it's kind of crazy looking back. Again, did I know that that would go to 273? No, I didn't. But again, it's a lot easier, I think, as the morning goes on, as the day goes on, to manage puts or calls, and it just options, because you'll have time again. And that was a Thursday, but really nice call here, really big day trade. in that one particular day. Any questions here? How are we doing? If not, I'm going to keep going here. I have a few more minutes. So people get into my room and they expect to win. They're focused, they're ready to go. We trade quick, we trade early. Having a winning mindset helps you. And again, I say chunk it out, because sometimes I look back and I say, well, I could have held this and I could have held that. I got out of the Tesla and it dropped more after I got out of it today. But I made money. Like, my day was done. I made the money. I did what I'm supposed to do. It's done. Again, trying to always be a pig, trying to get more and more and more, being greedy, can come back to bite you, particularly in this market, actually. So number 3, and very last thing, is to become an expert and have a focus. I think this is extremely important for everybody that trades. For me, it's about getting good, okay, working smarter, not harder. So how can I make the most money in the shortest period of time? And again, for me, that involves number 1, focusing on shorting, sell-offs, the beginning part of the day, the morning, okay. And for whatever reason, a lot of retail traders prefer to go long. So there's lots of people out there that have no idea how to short, can't short, don't have their account set up to short, don't even know what to short, and will miss out when the sell-off happens, miss out when panic moves come in, don't know what to do with the Tesla, you know, and or that's just an example. It could be other stocks that fall. You've got to be able to do both. Again, I can go long too, but I just prefer to short. But being consistent helps you in any market. You've got to think about it intellectually. If you're someone that has been all over the place, you need to get more consistent. You need to follow one strategy. You need to do one thing and get good at it. So if you decide you want to come and learn from me, and if you decide you want to take my class, what will you learn in the system? You will learn how to make money in the market by trading and rating gaps. You will learn the 26-point rating system. You will learn the entries. You will learn the exits. You trade them in the morning, early when they set up and trigger, and you will learn a structure. Again, my trading room, the way I call trades, is a structure. Having a structure will help you become more profitable. You must have the early morning time of the day to be able to trade, to do it between 9:30 and 10. And again, we're looking for precise entries with follow through and typically a good risk reward. So I'm looking for 1-to-1. If I get more than 1-to-1, great. But I'm really looking for 1-to-1 when I'm trading. But if you're someone that's been doing this for a very long time, trust me when I say you can do it. You may feel like it's impossible, but it's really not impossible. You can do it. You just have to learn, or maybe you're not with a good mentor. Maybe you don't have a good system. There's so many things out there. You have to pick and choose. And again, it's what works for you and if it's something that makes sense for you. So again, I've been trading now for quite some time. Any questions here? I'll let everybody know when the class is. Again, I said this before, understanding why really definitely helps you, because a lot of people are very curious. They want to know why. Why is this going to fall? How did you know Tesla would drop? Things like that. As human beings, we are curious. We want to know why. So learning helps you. It really, really does. So empower yourself today to trade. You'll learn a complete system. If you want to learn and take my class, the class is once a month. It's a full course on how to strategically find, pick, and play stocks that are professional bearish gaps. Class is online. Class is $69.99, July 12th and 13th, 9 to 5. I can't even believe it, but next week is July 4th. So the class is in 2.5 weeks. If you want to sign up, you can start trading with us now. I'm doing a summer special, really for people that are focused on doing options. I took that picture. Can you believe that's a picture of a heron in Central Park? If you sign up by Friday, you will get the Gap Options course free, which is July 17th. If you sign up for the Golden Gap course, which is the 12th and 13th, and you will get the Trading Room and Options newsletter free through the end of this year. Any questions from anyone about anything? I can quick pull up the market here and just see where we are right now. We're rallying. Any questions? Let's look at Tesla. Tesla looks good. Look at this. This looks good, actually. Any questions from anyone? Thanks so much for waiting and letting me talk. I'm sorry I'm late. Lots going on, lots to do. If you want to email me, you can email me here if you're interested in the class or the special or have any questions. Let's see it. And this is an exciting time to trade. Very, very exciting time to trade. Lots going on. And, I think people got to be careful. And it's one of these things where, again, you got to take profits. Don't forget to take profits. Things can turn and change on a dime. And taking profits is part of trading too. It's not just getting in, and it's also getting out. How's anyone doing? Any more questions? Good focus with CJ. I don't know if Anthony's there. I'll just show you really quick the trade we did today until Anthony pops on.
I'm here, but I want to see this trade as well. So go ahead.
We shorted this here and we got out here. So you see right in, this is a 1 minute chart. We got this in here, got all the way out of this. Down in here was a beautiful move. Now I actually got out of this before this bar, but I could have made more. So this came all the way down 324.83. I got a nice drop in here. I got out of this guy, but this came down here. I didn't get out of the low of this bar, but I got this. Like I was literally done like in 3 minutes today. And now looking back again, I'm in puts. I'm in Tesla puts right now. Actually, they look good. They look good. So we'll see.
Thank you, Melissa. Thanks for sharing all that. Really appreciate it.
Thanks for having me.
Thanks for being here. We appreciate it. That was electric. Melissa, the precision and simplicity of your gap method is what makes it so effective. Traders, her replay link and offer are in the chat, so don't miss it. I included her YouTube and her website there. And next up is a trading icon and founder of BigTrends.com, Price Headley. He's presenting how to trade quick options targeting 100% with pure price action. These are short-dated trades with powerful profit potential, and Price is going to share his 3-day rule, weekly options, leverage strategy, and more. So get ready. Here's Price Headley. Price, I think you're on mute.
There we go. Thanks, Anthony. Appreciate it. Let me share my screen real quick and we'll keep it rolling here. 1 moment. Make sure you can see that okay. Palantir Options Trader.
Yes, got that. Thank you.
Thank you so much. Let's get rolling. I appreciate it, Anthony. Great being with you all today. It's interesting, all the different edges that are out there. There's so many different ways in the markets, of course, to construct a pattern for you that can make you an edge. What we find a lot of traders want to be on are the leaders, right? And one of the most obvious leaders in recent times is Palantir. Many of you know it. PLTR is a symbol. We're talking about big time defense contracts really plugged into the whole AI boom. And how they're leveraging artificial intelligence. Of course, the stock has boomed as well. And, obviously there's plenty of others that are booming. NVIDIA just made a new high. We're seeing, of course, the NASDAQ in general leading this bullish recovery off of all the tariff-inspired fear and still unwinding, I think, some of that fear when you look across some of the different sentiment polls and things. So, the market has been incredibly resilient in the face of course, the bombing of Iran, where people worried about the U.S. getting involved in the Middle East, and yet the market still goes up, right? So that tells you we're climbing the wall of worry. So we're going to show you a specific pattern, how we trade Palantir across a couple of key indicator setups, how you can take advantage of this new market leader and basically getting a piece of that ongoing leadership that we think it will offer. And, leaders can get popped on the downside too. So we've got a quick downside little opportunity as part of that too when we get that opportunity. We're never going to force a trade though. You've got to let the market come to you. You've got to let the market setup be right. So I'll show you our setups and how we trade these. Reminder that everything that I share with you in this presentation today is based on our proprietary research, should only be considered for illustrative purposes only here. Should not be considered specific advisory recommendations. As you know, stock and options trading has large potential rewards, but let's face it, it's also got large potential risk. We're going to talk about both sides of the coin today. Walk you through the past performance but also a reminder that past performance is never a guarantee of future results. Do remember our terms of use, which are listed on our BigTrends.com homepage. Just kind of walk you through all that overview and more. But we're going to walk you through how to harness this powerful growth stock of Palantir. It's been a fascinating story. And you look at the connections with Alex Karp, Peter Thiel, and the successes that he's already had, but basically this has just become a monster winner and continuing to break out to new highs. One of the things I like about stocks right now, just when the market was pressing into old highs in the past couple of weeks, I want to be on stocks that are already making new highs, you know, when I'm looking for leadership to the upside, because that tells you that they're continuing to get accumulated by the institutions. The ones that have lagged, the ones that have not recovered to those old highs, you should stay far away from, in my opinion, because you need to know that you're on leaders. You need to know you're on stocks that institutions want to own, and this is one of them. And so we'll walk you through tactics that I've learned over 35 years of options trading experience and how we trade at what we call our Palantir Options Trader program. It calls out real-time alerts, when to get in and always when to get out, via email and also, of course, via text message, so you get them instantaneously. If you don't know me, I've been trading stocks and options for over 35 years. Caught the trading bug while I was a student at Duke University, and upon graduating from there, continued to cut my teeth in options, and then launched BigTrends.com more than 25 years ago in November of 1999. So blessed to have served tens of thousands of folks all over the globe. It's all about a quantitative edge. It's all about a systematic approach. You cannot be seat of the pants, especially when you get into options. You know, everybody thinks that it's an easy conversion from stocks to options, but there's so many other things going on with options. You know, you have the volatility factor, you have the time element, you have the speed of movement. How much speed are you getting or not getting? All these things factor in to making options a game that you need to have, you know, really cutting edge stuff working for you and tools working for you to put them to work for you. My quick history back when I was a student at Duke, I got into a trading competition. The main reason I did this quick history is to remind not just you, but myself, that the pattern that did not work for me is value buying. Value buying is a dud, if you ask me. I think that people that think that value buying is where it's at are really getting themselves stuck in a big problem area, especially when you get converting from stocks into options. If you buy a stock because it's down and you're hoping it's going to bounce back, too many times, especially if you buy calls on that stock that's down, too many times one of two things happen. Either A, it keeps going down, B, it takes a while to basically stabilize, to build a base, to recover from that technical damage that happens as the stock broke down, right? So you're buying calls and you're waiting for that thing to come back, and time is not your friend if you're an options buyer. You need speed. I have a true need for speed when it comes to options buying. And so if I'm buying calls, you can bet that I'm looking for a very short window and a very quick speed that I'm expecting, either from a snapback or more likely from something that's been trending up and continues to trend up. So I had switched from the value buying mindset because I was in this trading contest, was doing terrible, buying Coke and Gillette and Procter & Gamble right after the crash of 87, and said, I've got to do something different because I only had a month left in this contest. And I was like, it's about producing results. If you're in any trading competition, you've got to produce results. So I switched and went to an active trading approach. This before computers, just reading the journal and noticing this pattern of success that I noticed, and it went from the bottom quartile to the top 1% of the of the competitors, right? So that even sent me a letter saying it was the biggest comeback they'd seen in the final month of one of their contests. The idea being that it's like 14,000 students that were participating in it. The point being, I learned something that day, and I continue to remind myself: do not get tempted to buy dogs, to buy quote unquote down value stocks, because it's too long of a wait. After graduating from Duke, I became an analyst and ultimately head of research for, at the time, the nation's largest options newsletter. I made enough to launch BigTrends.com in late 99, and blessed to be now 26 years later serving people all over the globe. Also blessed to be featured in Barron's a couple of times as I was launching the business and saying, watch out below. I'm not usually a bearish kind of making a lot of bearish projections, but we had a major sentiment shift in 2000 after Y2K was over. Everybody thought it was safe to buy techs on the dip. Again, careful about buying stuff on dips, especially big dips. It's fraught with risk, and you can see that we're seeing record amounts of optimism in people buying techs after the market had topped in early 2000 and kept dropping. We said, watch out below. It's going to get worse. As you know, we had a 50% haircut in the major averages. Also blessed to be inducted in the Traders Hall of Fame, sponsored by Traders Library back in 2007, joining a lot of my trading heroes that I learned from. My goal is always to kind of pass along to you and fellow traders who are interested in continuing education, which frankly you always have to be interested in, to say, okay, what's worked for me, what can work for you, and that's what I'm talking about, philosophies that work and don't work, and be very careful of the buying the dip, value buying, if you're expecting it to go back up. It really can be a problem area for a lot of traders. So what is Palantir Options Trader? Why should you care? Well, what we did is we said, look, it's a leader, right? I mean, you're buying options on Palantir. They're not necessarily cheap. So our first objective when we're trading a momentum name like Palantir is we want to get our risk capital back and still have something left. So what we do is we say, let's start with our first half of our position targeting a double, right? If you can sell half of your trade out of the double, I personally do that on pretty much any vehicle I trade. It doesn't even matter if I'm a long-term investor and you own a stock and it doubles, and I own a stock that doubles, I like selling half of it. And people always say, oh, I've got to pay taxes on it. Again, don't think that way. Think about risk management first. That's what's kept me in the game for 35 years and counting. Sell half at a double, you get to a risk-free position, and frankly, it frees you. It frees you not just financially, but psychologically to say now you can say, I have zero risk in this trade. Doesn't mean you don't want to have any risk management. You still do, but you want to basically give yourself a little more room to let things run. I see way too many people that take all of their winner off the table way too quickly. So what we do is we're not going to hold this thing more than 5 days on a given options trade. Okay, so we're going to buy out to the next Friday's expiration, and we're going to say we will hold it a maximum of 5 trading days. But believe it or not, we think that, hey, there are trades that can go up 500%, 700 or 800%. If it gets to 1,000%, we'll take it. But the idea is that 5 days is our maximum. Even if it's a winner, 5 days is enough. We're done with that trade. But if we've doubled half, you really want to let it run for the full 5 days or the 1,000% potential maximum gain and give it that chance. You know, so even if it gets up 200%, 300%, but we're at day 3, day 4, I'm like, give it to day 5. Well, give it a chance to keep running. When you're on a winner that you've already gotten all your risk capital out, we call that other piece the runner. And it's those runners that will ultimately be your biggest payoffs. And that's what we're looking for, is to free yourself, to give yourself a chance for trades that can truly turn it into something exceptional. So let's go look at a winning trade example. And what we've got on here is for our Palantir options traders, calling out a trade here where you see the stock in this case, this is actually kind of coming out of a oversold zone. We're using our driving factor here is the percent R, Larry Williams percent range indicator, which is that green line in the middle panel there. And in this setup, we're actually saying it's coming out of the bottom third of readings here, kind of divided the readings up into three areas here, three zones, right? The 0 to 33%, 33 to 67, and then 67 plus to 100, right? So in this one, it's saying, okay, yeah, it's been oversold, but now it's coming out of there. Here we're coming out of there, and in this case, the ADX line is rolling over. What is ADX? It means average directional movement. And that means that, okay, we've been in a trend. In this case, you can see which direction was the trend when ADX was rising. It was obvious in retrospect that it was down, right? We can look at directional movement lines and other things to further validate that. But the idea is that if ADX has been up and then it starts to roll over, usually that signifies a change in trend. In this case, it's been down. Now it's starting to come back up, and we're saying likely the trend has changed from down to back up, and we're coming out of the oversold area on percent R. So saying now we're coming out of that kind of pressure point area where the bulls were being tested, maybe even losing a little bit as the bears press their luck. And then now things start to turn back the other way. So, you know, the market is constantly full of cycles, right? Cycles up, cycles down. So part of what we're trying to catch here is that we're coming out of a down cycle, catching it back on an up cycle. However, you will also see times where percent R can go into the top third of readings and stay very strong. So you would not want to short that necessarily just because it gets overbought and stays overbought. Stock stays relatively strong. But the first setup is coming out of this zone. So in that case, look what happens. Here we go. We get 3 contracts in here for 268. This is assuming you only put in up to $1,000. If you're putting in $10,000, multiply times 10, you get 30 contracts or more instead of 3. But in this case, we're saying, look, we're getting just 3 contracts because at 268, we can't quite get 4 contracts, so it pushes over $1,000 cap, just for a simple example for you. Now, when we look at that, we say, okay, here we go. We're in at 268. Our first objective is to double. Now, of course, if you get 3 contracts, you can't sell 1.5 contracts. You got to round up, sell 2 to get out to more than half. You can see that happens not on this first gap up that following day, and on a Monday morning, out not on Tuesday or Wednesday, but actually Thursday morning, maybe late Wednesday actually. Late Wednesday, it's surging up here. Notice the stock started off in the 76 zone. Now we've rallied more than 10 points up to the high 80s, maybe 88 or so. We've got an 86 call, 88, 89 bucks we're getting out at a double, 236. So now what do you do with the rest? You give it a total of the 5 days. So remember, we were in on a Monday, we're getting out late on the next Monday, right near the end of the day here. Stock now trading about 92.5, 93 bucks. Obviously on an 86 strike call, that's got to be worth at least $7 intrinsically. We sell it at 825 on that last piece for a triple. You've got a little bit more time left in it before it expires that upcoming Friday. Overall, that trade generated 1,093 bucks on a total investment here of about 810 bucks or so. And so you say, okay, look, the idea of this is that we want to get the double, but then we want it to run. And that's not the biggest example of a runner on the remaining piece. We'll show you more that were even bigger. But the idea is it's all about finding setups that work, that give you a quantitative edge. And remember, when I say that work, give you a quantitative edge, there's going to be winners, there's going to be losers. So first objective is to get the double, but guess what? If we lose a 50% loss on a trade, we will stop it out at the 50% loss, right? So we want to be targeting at least double what we're risking. Risk 50%, make 100% or more on the remainder. So the idea is we won't hold it more than 5 trading days. We're using that Williams %R% range indicator in a couple unique ways to find these patterns, and then kind of tying it together with the ADX, which is a trend following filter, right? Average directional movement against the %R% range indicator. Intraday charts, we're looking at 30-minute intervals. The 5-minute, 10-minute, 15-minute gets a little bit too active and too potentially noisy for me. I find the 30-minute is about as low as I want to go in terms of a short-term time frame. And then we're going to use the options that are going to hit next Friday's expirations. Remember, every Friday is a weekly expiration for big names like Palantir and all the other big NASDAQ names. And so the idea here is that, okay, this Friday is not enough time. If we got a signal right now, next Friday would still be acceptable because we're giving ourselves that 5-day holding period. So like I said, a 30-minute chart. A new trade could trigger in the first 3 30-minute intervals of a given trading day. So our potential entry time windows are either at 10, 10:30, or 11. Why don't we get in at 9:30? Because we're looking for that kind of confirmation that we're on the right side of that move at the start of a trading day, right? If you are just overreacting right off of an opening gap, by 10 o'clock when we get that first 30-minute close, it could have reversed. It could have gone the other direction. So you're looking for basically validation that you've got the wind at your back. You got the momentum working for you, not against you, right? You don't want to be spitting in the wind. You want to be making sure that time to put up the sails is when the wind's at your back, not battening down the hatches, right? We don't want to fight the market or fight what Palantir is telling us here. The nice thing is that this gives us a really defined scanning window in the first 3 half-hour bars. And if it hasn't happened by 11 a.m., this is Wall Street time, then we're not going to have a trade that day, okay? And that's okay. The bottom line is that we're not going to really worry about the trades that don't fire. We're more interested in just being patient and waiting until we get a fresh new opportunity. And that uses that speed element, that need for speed, and the fact that we're just going out to the next Friday's expiration. We don't want to hang around too long. So we need to know that we've got a kind of a good breakout, good setup happening to give us that opportunity here. This will give us plenty of trade opportunities, plenty of profit potential, and then when it doesn't work, we just stop them out, go on back to the sidelines, and wait for the next trade, right? So it's all about positioning yourself for more reward relative to your risk. The next Friday's expiration week options really gives us enough time, enough of a runway to let that trade take off on Palantir, bullish or bearish. Most of them are bullish, frankly, because that's kind of been the nature of the stock. But every once in a while, it'll get some downside risk, like what you saw back in March and April, where you can catch some pretty good momentum going the other direction, right? So that's the thing about momentum stocks. Never fall in love with a momentum stock. Always stay flexible, because just like they go up, they can come down. We know this is the case for any big Momo name. Look at the average options contract price going back to the beginning of last year. Entry price of average just 79 cents. That means you pay 79 bucks to control 100 shares of Palantir that's now trading at more than 145. That's like $14,500 right now that you pay for 100 shares. You can control that for potentially less than $100 per options contract on each 100 shares that it controls. So the point is, a lot of leverage potential. The trades are exited at a maximum of 5 trading days held in full by 3 p.m. on that 5th full day, if we haven't been closed before then at our profit targets or at our stop. Okay, so 5-day maximum rule. Why should you care? Okay, the overall performance looking backwards. Remember, look, we're looking backwards. Past performance does not guarantee future results. Future results are going to vary. It could be less or more than this going forward. But going back to the beginning of last year through today on all closed trades, if we have one open, which I think we may, that doesn't count. But you can see here that $23,723 in profit. This assumes that you started with just a $5,000 portfolio, and you're only putting in $1,000 a trade. So this is pretty low dollar risk on any one trade example, right? You could definitely scale it up. You could scale it down too. I mean, the idea of this is that, hey, if you're taking out, half at a double and then holding the rest, you could do this as little as 2 contracts or as little as maybe a few $100 a trade that you might expect to put in on average. But the point of it is that whatever your size is, I recommend that you be consistent on your dollar amount going into each trade, give or take. Not get too high or too low in any one setup, right? So that way you just be consistent, let the system drive you. So $5,000 starter model portfolio, if you put in $1,000 a trade, that started out at 20% of the capital going into that first trade, right? That seems like a lot, but notice we'd still be using that same $1,000 maximum trade, and now the portfolio is up to 28,723. That's before commissions and before subscription investment. But of course, that would mean that that $1,000 on that $28,000 area would be, of course, less than 4% of trade, or less than 5 at least percent of trade. You get the idea. Pretty minimal risk per trade of the portfolio, especially when you just use that fixed dollar approach, right? So the idea of this is that, okay, we're going to show you more examples. And of course, that means the 5,000 grid over 28,000 before commissions and subscription investment, and using the fixed $1,000 cap, not trying to scale up how much you put into each trade, reminding yourself past performance never guarantees future results. So setup wise, we're breaking the Williams percent range indicator into thirds, and we tweak it to actually use that positive scale from 0 to plus 100. I call it the grade school scale. It just makes more sense to me. But bottom and top thirds are actually what we want to trade for potential call options, bullish zone patterns, depending on the supporting average directional movement or ADX indicator pattern that goes with it. And so the only opportunity we have for bearish signals is when percent R has gone very high up in its range, and then we see an ADX starting to roll over. So we say that the trend is likely ending to the upside and ready to reverse back down. I don't give away all the exact settings here in my introductory events here, but when you become a subscriber, we give you all the tools that you would need, all the settings and rules, everything to see it happening in real time. Okay, and then of course we call out which option are we buying, which strike price, which rules are we following in terms of selling half of the double, how do we get out of the rest? We'll always tell you. We'll never leave you hanging. Let's look at more charts because they're worth more than 1,000 of my words. But part of this is that this is one of those really bullish percent R patterns. And this is basically exactly what you want to see in a monster uptrend. When you get a big move up, in this case, it's a gap move up to start off the day, right? So remember, there's 10 a.m. We opened on a gap up move there from the mid 40s. We open up here like 48, 47 and a half. And by the end of that first half hour bar, we're already up to over $49. We're buying the 52 calls. That was on a Tuesday. We're buying the 52 calls out to the next Friday's expiration. So they're 3 points out of the money or so, and you're paying $1.08, $108 a contract. So if you put in $1,000, that gets you 9 contracts in for $972 before commissions in all these examples. Commissions, of course, a buck a contract aside at most, and getting more and more attractive all the time with no ticket charges. So the point is, once you get into 9, okay, sell half, that's 4.5. So round up, it's 5 contracts we would sell at the double. In this case, notice what happens. This is our breakout pattern where percent R is strong in the top third of readings and ADX is trending up. Okay, so you want to see that ADX trending in your favor here. Notice, what does percent R do This is where percent R is sort of a misnomer. It's sort of a percent range implies that you're at the top of the range. If you're at the top of the range, shouldn't you be selling it? Well, I contend it's not a range anymore if it keeps making higher and higher and higher highs and higher lows. You know what that's called. The definition is an uptrend, right? Higher highs and higher lows. So percent R stays in the top third of readings, right? It doesn't come back down. And thus the stock continues to show an uptrending profile as a general rule here. Now, our first target was here the next morning when it gapped up, in on a Tuesday, out on a Wednesday morning. It pops on up past our strike price of 52, gets up to almost 53 and change, and you can see we're getting out about a buck in the money. We're getting out at 239. There's still some time value there, right? That ends up being more than our double target. It gets us 121%. That puts you in a guaranteed winning position, even if the remaining 4 contracts went to 0.0, right? Even if they were worth nothing, you put it on for 972, you're exiting the trade for an almost 1,200 bucks. And so you see you are making some money on the trade regardless of what happens to the final 4. That should free you up on the final 4 to let the trade run. Notice what happens. It keeps running, right? And remember the 5-day rule. So count out 5 days from that Tuesday to the next Tuesday afternoon. Now notice, you could say, sure, ADX rolled over. Maybe we should have gotten out somewhere in this area as it rolled over. You could do all the woulda, coulda, shouldas. Our data says for each one of those, there will be another one that keeps snapping back, and you want to give it the full 5 days. We gave it the full 5 days. Even though it peaked out at 62, we got out on the end of the full 5th day there of that final afternoon. 5 days later, that next Tuesday, at stock trading at about 50, almost 60, 59.8. And of course, that would imply that this option is worth about almost $8. And of course, that's exactly, we're getting out at mostly intrinsic value there, $7.80. Remember, we only paid $1.08. So those last 4 contracts going from $1.08 to $7.80, each of those 4 contracts made you $672 a piece. So times 4 of those contracts means you're making more than $2,600 on just the last slightly under half of your position here, 622%. So in the first 5, you made, basically about 531 bucks a piece, right? That was pretty good for the first 5. And yet the last piece makes you so much more, right? Going from 121% on the first just over half to 622% on the remainder. Nets out to $3,300+ in total profits, even after a commission of maybe 18 bucks total on this trade. You still be up 3,325 bucks, give or take. So the point is that you can dramatically leverage your initial investment as you catch these runners, as you catch these Palantir options trader continuation moves. Now let's face it, not all winning trades are going to hit as big a targets on the second half. Sometimes they'll even give back some, right? So here's one we did on Palantir where we got our buy signal. This is not one of the super strong percent R setups here. Get our buy signal here, and you can see we're about 78 bucks. We pause for that next bar, go down to 77. Don't panic. Our data says it's still likely to have another run to come. It does over this next couple of days. It pops on up here from, you can see we got into the 84 calls when the stock was about 78, and then it pops up here at about 82. It's going from 78 to 82, and yet we're not even to the 84 strike price, and we're doubling half our position from 83 cents up to $1.66. There's your double on half. Sell 6 of your 12 at the double. You now have a free trade. And guess what? We're glad we had it after the stock then gapped down. You can see maybe that was tied to earnings or something else. You see gaps down, kind of stabilizes for a day or so, starts to recover. But the point is that you can see here that indeed selling half and then having the fortitude to give that a chance to keep running is exactly what you wanted to see, exactly what you're after. So the principle of this is that we wait the 5 days from the initial entry on that Thursday. We wait to the late next Thursday. Here we are getting out. It does snap back, and you can see that last piece, because we were so much near the end of the day, we were still about 3 points out of the money. That last piece was only worth 26 cents. That was a wild ride, right? This is why you sell half at a double, because you might have some wild rides that you need to basically give it a chance to go. Sometimes they keep on rolling. Other times they drop, come back, but you can see the damage is done. The time loss is happening just a day to go before the expiration the next afternoon, only getting 26 cents back on those last 6 contracts. That's a just over 2/3 loss on the second half, and yet still, despite that, we still made $156 overall in the trade. So the principle here is that selling half at a double frees you psychologically and financially to let the rest of the trade run, win, lose, or draw. In this case, still a small winner, even though the people who held it from the beginning to the end would have lost 2/3 of their money, right? We don't want to play that game. This is why selling half at a double is such a powerful concept. Now, Palantir Options Trader, finding an average of 6 to 8 new option trades a month. Here's an example that had back-to-back winners. And you can see, just look at the %R graphic. You can tell what's happening, right? Staying in the top third of its readings. Guess what? Those theoretical overbought signals are not so bad after all, are they, right? You got to be real careful about calling tops and calling for bearish action when you're seeing this kind of leadership, right? We got our first breakout on the gap up there from the prior day. And you see the gap here is exactly what you want to see. You want a catalyst for getting into a bull trade. You want something tied to earnings, tied to upgrades, tied to new products, tied to management confidence, whatever it is that you see stock breaking out there. We're getting in that first 30-minute close, start of that next 30-minute bar. The stock's trading here near 100. And you can see we're buying about 10 points out of the money. We're buying the 111 strike calls. It goes sideways, even slightly against us that first day. We're saying give it a chance. By the 2 days later on that Friday morning, stocks rallied up near the strike price, right? We're about 109, and we're saying, yeah, it's not quite to the strike price yet. Our $1.77 is now worth $3.55 for 100.5%. And now we've sold 3 of the 5. We always, if we've got an odd number, we always sell 1 more than the whatever the rounded 2.5. We round up to 3. So we only have 2 contracts left here on the remainder. So 2 contracts left. Those go on to a 315% gain compared to the 100% gain on the first piece, right? So you can see how powerful it was to just let it keep running. You know, if we could have let it keep running some more, maybe we theoretically should have, right? In this case, it kept on going, would have been worth like 13 by that Friday expiration. But we don't play the woulda, coulda, shoulda game. We're happy with those last 2 contracts generating about a 4-bagger for us from a $1.77 to 7.35 up near 116. $1,650 in profits for a maximum of about a week held from one Wednesday to the next. Now here's the other one. You can see that we're getting into this other signal here. So we can, if we sell half, this is actually, if I confuse it here, this is where the first trade that we show you here was sold half right there. If once we sell half at a double, we can get into a new trade. Okay, so we actually got into a new trade a couple of bars later on this one because it said it's still looking really good. So this is the second trade entry on the 118 calls when now the stock's sitting about 108. Again, about 10 points out of the money, 6 contracts in for $153, right? Once you've gotten your risk capital out of that last trade, you can roll over into a new trade. Still have the half of the original on, plus the new full position on here at 153. As it ran up here and then doubled from 153 to 306, we're out of that one and then into that Thursday morning, and then you can see the remainder goes on to rip. So that was the advantage. We did have another trade that did ride it out into that Friday rally and did make 664%. The final 2 contracts went from 153 to 1170. That's you can see here, $150 to $1,170, $1,020 of profit on each of those 2 contracts, $3,500 in total profit on that second trade. More than double the first big winner of 1650, right? Now puts, let's talk about puts for a minute. Downside trade. Downside trades are a little more rare. The pattern has to be that %R is over 90. So you can see that can happen plenty of times, right? Because of course, if it's breaking out to new highs, it can be over 90. But if it's over 90 and then ADX rolls over as we're getting those readings, still very overbought, but also ADX saying that we're losing the uptrend here, that it's saying that yes, the risk of a reversal has increased. So there's where we're getting into the put. Stock's about 96. We're buying the 87 strike put, 9 points below, about 10% out of the money. And you see the first tank down here to about 90. We're not even to the strike price, but we're right by about 6 or 7%. And now we're basically in a position to say sell half at a double. So when it does bounce that following day, we're not panicking, right? We're saying, okay, you sold half of the double, give it a chance, and it rips down over this next couple of days. A further gap down the following Monday. Remember, we want to be out of this thing. We got in on a Tuesday morning. We want to be out of it by the next Tuesday afternoon. We get out there, stock's down to about 82. So about $5 in the money, we're getting 545 or 312% gained for that last piece of the trade, right? So total generated profit on that trade of $1,767 gross before at most $14 of commissions, 7 in and 7 out. So the point is that, okay, that's how you take advantage of a downside setup. They will not be that frequent, but when they hit, the momentum stock can definitely take a hit on its own. Now, what about losses? Here's one that's just too slow off the line here. This was Palantir 102 strike call. We catch the strong setup. We've got the ADX trending, and that says we should trend up. Notice at first it pulls back, then it trends up. So we lost a little bit of initial time there, did not hit our first stop in that first pullback. It bounces back up to a small gain, then it starts coming back down, and you can see as it's coming back down, essentially we're getting our exit here as it ends up violating the key %R support area to go with that ADX has rolled over there. So you can see we just lost every bit of impetus to hold the trade in at 230, out at $112, 51.3% give back. Okay, it happens. Now here's a trade that climbed from its initial entry price of just 71 cents or $71 per 100 shares to 5 1/4, right? So you're talking about, again, a big potential return on investment here. Bought 14 contracts at 71 cents. Again, do you see any kind of commonalities here? The pattern of success is don't be afraid of an overbought %R reading. If you're making higher and higher highs, ADX is trending, that's good news, right? The very next day it gaps up after we got in on that Friday morning. The next Monday, next trading day is Monday, we gap up, getting our first profit there. And then you see it starts to come back down. Not too much longer after that, okay? So, but you can see the principle is stair-stepping its way higher. That's what we're after. So for now, hopefully it's making some sense exactly what we're seeking to do here. And you see $3,800 plus in profit, 639% as it kept going. You know, that final run to about 64 and change. Remember, we had a 59 strike call. 64 is worth $5 plus the little bit of time premium left. That worked out real nicely. Now, a lot of people say, well, trading options on a stock like Palantir might be aggressive. Obviously, it's not for widows and orphans, but the idea is that, look, we're all about having a system and a systematic way to trade it. The laser focus of trading just the one vehicle is refreshing. I don't know about you, but the biggest challenge I face in the markets every day is information overload. It's too much data. The pipe of information coming out of all of this is massive. You got to get the blinders on. You got to get laser focus on what you want to accomplish. And I think focusing on one key leader like Palantir is a great way to go. You can see a model portfolio of $5,000 starting amount, putting in $1,000 a trade maximum, never growing that. These examples are before commissions, but they're also not leveraged to the hilt like somebody that was trying to compound their initial investment could do. We're keeping it simple and saying, let's not even try to over compound it. $5,000 portfolio grew to more than $28,723. And of course, before commissions, before subscription investment, but the idea being that commissions have come way down. Our subscription special I've got for you in a couple minutes is superior to give you a way to test it out and let the system prove it to you for a little while. And I think you'll be pleased. So just remember, past performance never guarantees future results. We're showing it with $1,000 per trade maximum on every trade with no compounding. So, and until midnight tonight, we set it up so you can actually take advantage of this Palantir Options Trader real-time trade alert special with a strategy that triggers fresh signals coming out of the gate on any given trading morning when we get the setup. So Palantir Options Trader, I'm going to set it up. I don't really like the idea of a 1 month trial because I don't think it gives you enough time to really see it through a variety of market conditions. And so what I've set up for you is even greater savings on a 3 month package here. So a 3 month package includes a lot of additional educational resources. We also give you our settings and rule sheet So you get all the nitty gritty. Our terms of use just say that you can't share that on the web. It's for your and your family's benefit, and when you sign up as a subscriber to Palantir Options Trader. You also get access to my weekly training videos where I teach you about what we did last week, what are we thinking for the week ahead. You also get access to me and my analyst team via dedicated email address as well. So this would normally be $297 a month off of my Big Trends website, $891 total value over 3 months, but we're scratching that down dramatically today. Take the $891, take more than $700 off, more than 80% off here. Take it down to only $177 for the next 3 months. And so, and with the educational bonuses, with all those resources, $177 over the next 90 days, that means your average cost per day is less than $2 a day over the coming 90 days, right? That's a phenomenal value. So where do you go for that? Go to this link we set up for you here. It's not a www link. We want you already thinking like a member. So we put it via our members.bigtrends.com membership site. It's members.bigtrends.com/corner. Now, if I've got time, I'll look at that page with you, but it's really simple and easy. But let me just kind of remind you of the common questions we get. So what's the option strategy again? It's the simplest one out there. Just buying a call when we're bullish, buying a put when we're bearish. As it doesn't get much simpler than that. How do you get the trade alerts? They're sent to you real time via email. You can also get them your text messages via the WhatsApp technology. We help you get that stuff set up. When do we send those new Palantir Options Trader trades? We'll send them before 11, up to and by 11 a.m. Eastern. Any of the first 3 30-minute closes is what we want to measure and see. Do we get a validated signal at 10 o'clock, 10:30, or 11 o'clock Eastern? Those first 3 30-minute closes of any given trading day. Now, when will we get out? Well, the first rule is that we'll sell half at a double when we get the chance, right? Or if we are giving a chance that hasn't been price stopped out, then we'll go ahead and give it the 5 trading days maximum, right? So if I got into this morning on a Thursday, I would go till next Thursday. And of course, next Thursday actually, of course, will be the expiration next week because we got the July 4th holiday. So we keep all those things in mind too. So average of about 6 to 8 trades a month. So we're not hyperactive. But one of the nice things is when the trade is working, I showed that one example where we sold half at a double, and then we were able to put on another position even while the other half was still open. That's kind of nice, and that makes sense too. Trades that are working deserve to get more exposure, right? Trades that are not working do not deserve more exposure, right? So the idea is that when it's winning, when it's working for us, we don't mind getting some overlapping additional trades at some different expirations to help you continue to ride a big trend in Palantir. What's the average entry price of a Palantir options trader trade? Less than $2 a contract the last 12 months. We said all the way back to the beginning of last year was actually closer to like 80 cents a contract, right? But here more recently, because the stock is higher, those option premiums are going up a little bit. It still gives you massive leverage when the stock's trading here over 145. You say, okay, it's trading 140. That would cost me 14.5 grand to control 100 shares. You can control that same $14,500 worth of stock for typically a couple $100 or less. Okay, so that's an advantage in terms of massive leverage against the underlying. What are the included gifts you get when you act before midnight? You get multiple ones. You get the weekly video training updates on the system in addition to my settings and rule sheet for Palantir options traders. You know exactly what we're looking for to get in, exactly what we're looking for to get out. You also get dedicated email to me to reach my team of analysts and myself. So that's something that you'll continue to learn while you earn. So just a reminder on what one trade could do for you, right? Just one trade. This is even not the biggest trade. This is just the most recent one where you see that we had an 86 call, bought at 268, sold 2 of them when it doubled. The other one went on to a triple, and the trade generated $1,093 in profit. So the idea is that you can easily pay for this service on just one healthy winning trade across both of the key techniques that we're looking for. So you can see this is the kind of thing where, yeah, this would get you a pretty massive bang for your buck when you're only having to invest $177 for the next 3 months, right? So that'll cover you through all of July, all of August, and into most of September, right? So basically, it's going to give you, I think, a variety of setups, and ultimately give you some bearish opportunity too when we find the right setups for that as well. Notice $5,000 model portfolio grid over 28,500. That's gross before commissions, before subscription investment. But the key is that we're saying, remember, past performance never guarantees future results, but we like to say that you're going to see a lot of these patterns repeating. You're going to see a lot of the right kind of setups where you know what to trade and how to trade it, with our clarity of our instructions, exactly when to get in, exactly when to get out. We never, ever leave you and fellow subscribers hanging. You always know where we stand, and we stand by to answer any questions you have if you've got any. But we'll always call out the exits for you too. So again, 3 months of trade alerts, in addition to all the educational bonuses. Where do you go for it? You go to that special link we set up for you there, members.bigtrends.com/corner. A big thank you to Anthony and all the crew at Traders Corner for helping set this up. It's always a lot of fun to be with you. Thanks, Anthony, for posting it for all of the attendees as well. It's not going to be around very long, because usually this sells for a lot more and for a longer subscription time. So I think you'll try it for 3 months. You can start small and then build up in terms of your capital. Never put in all your capital on any one trade. Always kind of take it the slower and steadier approach. Stay in the game for the long haul. That's how I've been in the game for 35 years in options and counting, is never going all in on any idea, no matter how much I loved it, right? Always being just kind of slow and steady wins the race on your capital allocation. And just remember, you're looking to create the discipline to stick with things over time. So I'm at my time limit here. So my time has expired on this session, but I look forward to a lot more time to serve you with the Palantir Options Trader Service for a long time to come. Thanks again, Anthony, for having me. It was a lot of fun.
Thank you, Price. Really appreciate it. You're such a professional, so many years of experience. Really great. Really appreciate it.
My pleasure.
Phenomenal presentation. Those quick option setups and your strategic use of time stops are an absolute game changer. You can find Price's limited time offer right now in the chat, so be sure to check that out. Our next speaker is all about the mindset, structure, and progression toward real, reliable income. Please welcome Norman Hallett of the Disciplined Trader, presenting Success Progression from Trading Room to Consistent Income. Norman will guide you through finding the right trading room, building a plan, and ultimately transitioning to consistent, relaxed income. So let's get started. Norman, it's all yours.
Thank you. Can you hear me okay?
Yes, thank you.
Okay, great. Hey, if you just listened to Price, this guy knows options. I ran a very large option firm about 30 years ago, and you know, there's very few better than I don't know of any really better than Price. So if you're an options trader, you really do want to consider his offer. We're going to talk today. This is a presentation really that is may hit a few people hard, because I'm going to be very real here. This presentation really is for primarily prop traders. If you're a trader who is a retail trader, not prop trader, this will work for you too. But it's for really traders who want to be independent traders, who don't want to pay money and fees and trading room fees, and wants to, in the end, sit there with their computer and be in a business-like way and be a very successful trader. Whether you're retired, a lot of the people that I've converted to this process are retired individuals. Others are very new at it. Had somebody that I thought he was a teenager, but he was 30 years old. He looked pretty young. Anyway, let's get into it, because there's really only one main slide here. You see some slides there on the left. You can see how short the presentation is. But there's one main slide that we're going to focus on in this presentation. I want to describe to you a prop trader's success path, taking you from the evaluation stage to consistent income, where there's no more laying out any money and it's all taking it all in. Okay, so let's get into it. If you don't know who I am, my name is Norman Hallett, and I have spoken on countless domestic and international stages for the last 4 years. In fact, Price and I have shared several stages together, and mostly in the expos. And this has taught me a lot about the needs of specific, of all the different traders when you have a booth and you're talking to them, not only there, but of course when you're working with clients one-on-one. But I've always been kind of a ham, so I like to do some live stuff when I can. I've written 4 books on trading plans. 1 or 2 are still available on Amazon, and you can get them used in other areas, other used bookstore places. But I've written dozens of papers. I just came out with one, and if you can find me on the disciplinetrader.com and go to the contact page, I just came out with a new paper. You may want to request it if you're not already on my list. And I've written many of them for most of the, if not all of the technical papers out there involved in trading. I always focus on building and running responsible trading plans in my books. But I am known really for infusing the importance of mental and emotional discipline to my trading. And I think that that is an area that is void in most everything in the industry. And that's really largely my point here. When you trade, you need a good trading plan. We're going to discuss what that looks like. One that is tested, one that is logical in why it makes its decision. But you also have to have the mental and emotional capability. You have the capabilities. You have to be able to advance your capabilities into actual practice, so that you're not chasing trades and so on. Without either one of those, you're nowhere. In fact, without either one of those in the 95 percentile, you're nowhere. In other words, you've got to be good at both. Otherwise, you're just going to be, at best, a break-even, frustrated trader, or you'll be somebody who knows all about losing but knows very little about winning. So let's get into, well, first I want to mention where I come from here. This room right here is a facsimile. It's an actual photo, but it's not of the room that I ran. As I mentioned, when I complimented Bryce and his ability to and his knowledge of options, I know that because I ran one of the largest option firms in the country in the 80s, from about 1982 to about 88. That's 5 or 6 years. Then I went over to Payne Weber as a commodity trading advisor, managing millions for customers, where I made 20% of what I generated. Those were pretty good years. But this room here is what taught me what a trading plan looks like. This is where I learned how to build my own trading plan so I could get that position at Payne Weber. What you see here, or what the facsimile of it is, 63 professional traders trading for their personal clients under our umbrella. And when one of these traders weren't doing well, I would call them into my office, and almost to the man, there were 2 women of the 63, to the man, or the women were always very good. I hardly ever saw them in the office. But some of the guys, when I came into my office, the issue was complication. Too many indicators, too many hoops to jump before getting into a trade, too many hoops to jump before getting out. And my red pen was the most popular thing on my desk, as I helped to eliminate multiple indicators that were indicating really the same thing. I mean, there's no reason to have a MACD and an RSI on your chart. They're both momentum indicators. Why do that? There are some are involved in some indicators are part of other indicators, but we'll get into that in a different discussion. But this room taught me what worked, and it taught me that simple trading plans work, and that every trader is different. So every trader I'm talking to here is different, and so I want to stress that, because unless you can identify who you are, do the self-analysis, and then apply that to your trading, I'm going to show you what I mean by that, you're not going to get very far, and that's probably the cause of your frustration. So let's get into it. I'm going to show you this. This is the one slide that I'd like to spend most of my 45 minutes with. This slide is I've really laid out here in 3-phase form with three major points of not only discussion but of completion that one must do. And I need to get into each one of these so you understand how you move from a prop trader who's just keeps on buying evaluation accounts and keeps on resetting to one that is running their own long-term income business. I know that it doesn't sound possible to those that have learned to just lose. You've got to learn to think like a winner. And here's how you do it, okay? Let's start at the beginning. This is your fast track to trading independence. And when I say fast track, that speed is up to you. This total view can be done in probably 45 to 60 days from start to finish if you see yourself as an aggressive person. If you're somebody who likes to take their time and work in a nice controlled pace, maybe that's more like 70 or 90 days. But this is a fast track way of doing it. This leaves no gaps in what you need to be successful. Okay, let's take it one by one. Let's first go through the first phase, which is, I call it the simple trading plan that fits you phase. And it recognizes the fact that you are unique. This is the reason why you cannot take somebody else's trading plan that's doing so well or buy all the trading plans you may have already bought, and none of them seem to work. You can't seem to stick to them. This is an issue of match. This is an issue that has to you have to recognize that you are a unique trader and that you need a simple trading plan, as I've just stressed in the previous slide, and you need to have that simple trading plan fit you. So the first issue is finding and employing a simple, proven trading plan that is built for prop trading. Now, it's important that I added the built for prop trading because there are our loaded gun simple trading plan was originally built for retail traders and had many of the, if not just about all but one or two of the principles that a professional trader like I was as a commodity trading advisor, and this is the same kind of principles that the trader next to me would use, and every commodity trading advisor worth their salt has basic principles that they use, and basic rules that they use. They have a certain number for risk management on each trade and then portfolio management. All of that is normal. But in prop trading, you need to respect that red line, that trailing red line that follows you, the blowout line, where if you breach, you either have to reset your account if it's an evaluation account, or you have to go back to the evaluation account if you blow out your funded account. So you need to have a system and a process that respects that red line, not fear it, but understand it and utilize it to make you a better trader. So not only do you have to have a proven and simple trading plan, simple means you're not getting caught up, you're able to take multiple trades. You can take more trades with a simple trading plan. Sometimes it requires a faster exit. But if you're like me and like most traders, you want to be in the market when you can, as long as it's in a responsible way. Simple, proven trading plan, one that's been around, like Loaded Gun has been around for the last almost 5 years now. And the last 2.5, almost 3 years, it has been adjusted for prop trading. It is a simple, proven trading plan that is built for prop trading. You need that. You just can't take any trading plan and go into prop trading. You know, the trading plan you may have may be a professional type trading plan with the elements that are needed for prop trading. But I have found in working with traders one-on-one that that is usually never the case. Okay, they're done by somebody who's never traded, or somebody who's an educator and not a trader, somebody who is not a prop trader. So you need to have everything lined up in your trading plan. Okay, assuming that you have a trading plan that works and is responsible for prop trading, the next thing that you have to discover realize is that every trader is different, and you need to sit down, not in a day, but probably a few days, sit down and analyze who you are. And you need to define your strengths and your weaknesses, because unless you do that, you will not be able to complete the match that you need to have a trading plan match who you are. In other words, let's say that you're somebody that you admit to yourself that you're an impatient trader, that you tend to be so into being in it. If you trade for a 3-hour period and you haven't gotten a trade trigger for 2 hours, you're chomping at the bit. It's a Friday. You're not going to trade for the weekend. You've had a neutral or losing week. You want to get back. You start to bend the rules. You start to do you start to do things that an impatient trader does. I listened to part of Price's presentation, and he did mention that sometimes he doesn't have a trade, and sometimes that will happen to any good traders. There was one time, almost a week, I didn't have a trade. So you need to be responsible, even if you consider yourself more of an aggressive trader. You need to know your strengths and weaknesses. Now, if you are, for instance, a trader that realizes that they're doing their best to be patient, but they have not been able to be successful, it seems to be their Achilles heel. It's what's keeping them, or break even, or it keeps them busting out accounts. Well, there's a number of things that you can do, and I can't mention all of them here, but I'll mention a couple of them. One thing that you can do is tighten up your candle size. If you're used to trading a 5-minute candle, maybe move to a 2, because you'll get more frequent signals. The take won't be as your profit per trade will likely will not be as large. They won't, like, can probably omit the word likely, but you'll have many more of them, and they will add up to sometimes the same or more success than somebody with a 5-minute. But that is only for the trader who considers themselves impatient to a degree. It's one thing that you can do. There are a number of other things that are even more impressive that we can't go through here. I just don't have the time. But what I'm saying, the important part of what I'm saying is that you need to first identify in a truthful way your strengths and your weaknesses. You know, I took a very expensive, in the beginning of my entrepreneurial career, I took a course from a very famous entrepreneur, and the first thing they had us do is write all of our friends a letter and say, please write me. It was during letters, and it was before email even. And write me a letter and tell me what my strengths and weaknesses are. So if you have any trading friends out there, trading partners, go to them and ask them, hey, what are my strengths as far as a trader, and what are my weaknesses? I think you're going to be surprised sometimes by the answer, but you'll get something truthful. And tell them, don't placate me. Be truthful with me. I'm trying to figure out the best way for me to trade. You must identify your strengths and your weaknesses, okay? Then when you do, you need to match your plan to you, who you are. You see, the mental and emotional piece in trading is the piece that 90% of traders fail on. Now, I'm going to say 95. Look, 95% of traders lose. I think that it used to be 90. I think that number is upped recently with the higher volatility. If 95% of traders lose, I will say to you from my experience that 95% of traders do little or nothing for their mental and emotional well-being. That is a match in my estimation, assuming they have a decent trading plan. Listen, there are good trading plans and great trading plans. You want a great one, but you can actually make money with a good one if you've tested and so on. Loaded gun, of course, is a great one, not just because it's mine. I think if you know me and you've heard about loaded gun, you know that yourself. Anyway, match your trading plan to you. We use what I call nuances. I broke into the prop, not prop trading, but the writing trading plan business, and I've been doing it. I still do it for professional traders, for individuals. Once I get to know them, again, I write trading plans to match an individual. So I created what's called nuances. Nuances are small things that you can do to offset some of what you consider your weaknesses. They won't make them strengths, but they will neutralize them. They won't get in your way. Sometimes they will make you strength. I don't want to say you'll turn it all around. You need subconscious and mental training to do that around, but the nuances can be enough to neutralize a bad trading habit. Okay, and I do this. I've talked about, and there are 9 nuances right now in our program that are standard, and there's others that I can discover when we talk one-on-one. But the idea here is that nuances are important in that they match you to the trader to the trading plan, and that is the key. Okay, so, and I do that again because most traders will not do the mental work, will not listen to meditations that are provided that we make for traders. They won't use any other processes to stay calm when they're trading and focus. They won't take, not focus factor. You probably know that, but I take a what they call, let me read it. It's called an adaptogen Nutrigen. It's for my brain. It keeps me focused. I can't even pronounce the word. Don't have my glasses on. But the idea here is that you need to do everything to stay focused. Okay, nuances are something that physically, that technically you can do to the trading plan to help you if you're resistant to mental training. Okay, it's not the answer, but it's part of the answer. It's enough to make you turn from struggle to winning. Maybe not winning tremendously because you need to train your mind. So let's get to the second phase, which I call the positive expectation phase, which means you're installing a winning mindset. All right, this is important because what's happened to you likely, if you're listening to every word I'm saying, if you're stuck on what is he going to say next, the losing that you've been doing has created a habit of an expectation of losing. When you're in a trade, you expect to lose. In the beginning, you see it set up, this could be a winner, you take it. As soon as it starts moving the wrong way, the next thought is, oh, another loser. This is a mindset that you must reverse. You must reverse. You need to go into a trade with a winning expectation, positive expectation. So how do we do that? The first thing that you do is that you need to understand the why of your trading plan, because this will get you through the tough days. In other words, it's great to have a trading plan that's excellent, that's tested, that's proven, but you must go further. You must know why the trigger is the trigger, why you're being asked by the trading plan creator, the guru that's asking you to do something. You got to know why. Why am I doing it? Well, I'm doing it because the momentum is here and the moving average is crossed, and that means that the tighter moving average is crossing the slower moving average, which is an indicator of direction change. Plus, you have this trigger, and then you add the volume, and now you have a perfect combination of why you should be taking the trade. So that when you get a trade and it starts to move against you, you stay confident because you have an expectation to win, because you understand why you're being asked to do something. Okay, I mean, you know that in life generally. You know, when somebody's asking you to do something that you don't understand, say, why are you asking me to do that? You need to know exactly how your trading plan was devised and the whys of why do I put my stop here? Why am I lifting my stop? Not should I lift my, not where, but why. You need to know why, because the why will create a positive why. It will give you the positive expectation. Okay. The second thing that is important is you need to model a winner. This is, I'm putting you on the fast track now, okay? Because to create a positive mindset, when you have a losing mindset or a break-even mindset, or oh my God, I'm spending all this time mindset, anything other than a positive mindset, you need to see a winner in action. You need to see on a daily basis somebody winning 3 out of 4, 4 out of 5 days of the week, and winning nicely. You need to see it happening over and over again so that you can model that person and say, hey, this person has got it down. I want to be like this person. And you need to turn that around. You need to understand that somebody is winning that is using the same system you're using. Somebody is winning using the same system means not one time, but for a week or 2 weeks or 3 weeks, there's a breakthrough that you say, oh my God, this can work, really work if I just follow the rules. You need you need to model a winner. And we have a trading room run by a guy named Dan DeMaria, who was a former, if you're a floor trader out there, you probably know him and heard of him, the CBOT floor trader who's retired and runs our trading room with his son, Matt, who's already 30 years old, I think. And they're both in the trading room, running the trading room. Not only is it fun, they're interchange, but the two of them educate you in a way that is fun and effective. You need to develop you need to model a winner and have a winning mindset, okay? So the third element of this phase is you need to also begin weaning yourself off of the trading room. You can't just keep on paying month after month in the trading room for the purpose of becoming a winner. It's good to do once you're earning $5,000 a month, $10,000 a month, or whatever that number is for you to pay $199 a month or $147 a month, like our trading room is. That's nothing. You want to keep the connection when you need it, when you feel weak or when you want to be lazy. But the idea is that you want to wean yourself off of the trading room. If you've been on a trading room, I met another guy the other day that's in 5 trading rooms. He's in 5 different trading rooms. Why? I mean, I understand getting good ideas, but you've got to settle into what works for you. And the reason, and nothing is working for him in the bottom line. So you need to find a trading room that matches what you're doing. So find the trading plan that works, that you can have match for you, and use our nuances to do that. And after analyzing who you are, match the trading plan with you, and then develop the positive expectation. Go into the trading room and see and feel what's going. Understand the trading plan first. Takes you a few days a week with a simple trading plan like ours. You'll see plenty of examples, and then you'll go into the trading room and see it operate in action, and you'll see somebody doing it and winning. And then you'll begin weaning yourself off. A few months down the road, you'll go from 3 or 4 days in the trading room to 2 or 3 days. On the day you're not in the trading room, you are sitting by yourself on the computer, and you are trading like a professional trader. You have the professional mindset on. You have a trading plan that fits you. You know that you have a positive mindset, and now you're going to see how long that lasts. Well, sometimes it lasts forever. Most of the time, you'll start, and there'll be a little bit of resistance. You'll go to the trading room, regenerate that positive expectation. When you're on your own for 1 day, okay, out of the 5 days of trading, if you happen to trade 5 days, then you're only trading. You have 1 day, maybe no days of the week in the trading room. You're doing very well. If you have a cold, or you just got back from a procedure for you retired people, you know what I'm talking about. Then maybe it's nice to be in a trade room and have somebody call trades. You know why they're doing it. And so that becomes what you want. You want to wean yourself off the trading room so that you're not paying for a trading room forever. I like, some people who've been with me love to pay for the trading room forever because they just because they're making enough money so that that's meaningless. But the point here is that you need to learn to trade on your own, okay? I became my best trader when I wasn't in the trading room with all the professional traders. I had my own office. When you do pretty well, they give you your own office. That's when I really took off. No distractions. I had a trading plan that I built myself that fit me. Now I'm moving. Okay, I am I was the trading room at the time, but I think you get what I'm talking about. The trading room is a crutch. It's the training wheels. You need to get out of the trading room. You want to have it for your own uses at some later point, but you want to be able to sit in front of a computer and do your thing, okay? The independence, looks like I've got about 3 o'clock. I've got about 15 minutes, looks like. Independent phase, building a stable long-term income. This is the phase where you want to get to. This is the phase where I'm at, and where Dan is at, and where you want to be at, okay? This is where you are dependent on yourself. You've got that positive attitude. You got a trading plan that works and this fits you. Now you're ready to go out there on your own. The first thing that you have to do is to consider what you're doing as a business. Now you're in business. You're in a one-person business, and you need to that's when you have this. That's when you need to look at the statistics of what you're doing, in a more concentrated fashion, and you need to have the mindset of a business owner, which is a little different than a trader. You can have both mindset. Mindset when you're trading is a trader's mindset. A business owner's mindset, an entrepreneur's mindset, is a mindset of growth and control, and you need to have that. In other words, when you have a losing day, that's very similar to business to putting an ad in a magazine or online and nobody contacted you. You'll never do that. You'll learn. Okay, so when you're in a business, when you have a business mindset in trading, you're framing the things that you're doing in trading, the wins and losses on a daily basis, and the interim movements during the day, as in a business sense. I think I tell you more about that at a later date, but I think you get what I'm talking about. And you need to approach it, you need to have the turtle approach. And, Bryce mentioned that also. We professional traders, we know what a turtle approach is. You cannot get excited. We know that a small, profitable day, 3 or 4 days in a row, makes a really nice day if you add it up. And that's really what you want. You want consistency. So you want slow, controlled capital growth. You want to pay attention to the top line more than you probably did before when you're looking. You want to do that. You're looking to grow your business, okay? And long-term income planning, which means building your personal, I call it the money machine. What that means is that as a prop trader, you're taking out money. Should you be taking out all that you can? Should be taking out half? There's a controlled way to allow that income to build so that you're moving way away from the red line, so that you can open up your trading chops a little bit more. Instead of 6 micros that you're doing in a $50,000 funded account, you can now move to when you build it up to 62, 65,000, now you can use 2 full contracts, or 12 micros or 15 micros. So you can adjust. You're doing the same thing, but you're honoring the fact that you've been a turtle and you've built the account. Okay, if you want to take a picture of this, go ahead and do that. I'll leave this up just for a second, but I want to just show you what I have for you, and then we can move on. I can move on now in my presentation. Okay, so here are some of the things I wanted to show you. Some people who have taken my words to heart and are now with me and working with me. I've felt burned out for a very long time, multiple systems, methods, and indicators. I like the loaded gun system because it's just so easy and, yes, simple. I understand to understand and use. What loaded gun has given me is an edge, and that's what you're looking for in trading, an edge in my trading. Sometimes an edge is all you really need. I guess he said it better than I did. Many thanks, Norman, for your wisdom, knowledge, and friendship. If you commit to me, I will commit to you. This is Jeffrey Sasser in New York. I'm up over $10,000 in 7 days on a $250,000 PA account. Thank you, loaded gun. This is Brian, who's a struggling trader. Again, as Bryce said many times, past performance is not indicative of future results. But I think you know that in prop trading, these things can be real. You've heard about it. You've seen the payouts in some of these prop traders. Okay, the loaded gun is simple to understand, set up with an easy to follow rules, works with any time frame. It takes me less than 5 minutes to look up look at all the markets I trade and make my plan for the day. After that, the most importantly, follow the rules and join the small percentage of traders who consistently make money in the markets. That's Ted. He's become a very big support and has referred a number of people to my firm. In any event, this is Dan. I thought I'd just give you a little bit about the guy who runs the trading room with his son Matt. Dan DeMaria. He's a former independent floor trader, member of the Chicago Board of Trade. 12 years, he was the mayor of Morton Grove, Illinois. So you may know him already in Illinois. He retired this year. And he bought loaded gun. He thought it was brilliant. And he's a trader in his own right. He was brilliant. He said, I'd love to help you promote this and help people learn it. He and his son run the trading room. So it's a pro trading room. He's a moderator, and with his son, Matt. He's even had a street named after him, Dan de Maria Drive. So if you're ever in Morton Grove, make sure you take a spin down Dan Maria Drive. This is something about Dan's room. I wanted to give you some specific feedback. And this room has been around for 1 month. So this is the kind of feedback we're already getting. I wanted to take a moment and let you know how amazed I am with Dan's Loaded Gun Trading Room. I booked 3,300 across 2 eval accounts this morning. I didn't expect this, but I can feel myself borrowing discipline and patience from Dan. He's kept me out of trades I think I would have taken. The learning experience has been incredible. This is a fantastic thing you guys have set up. This is from Brian in Omaha. And DD said from Orlando, Loaded Gun, the Loaded Gun Simple Trading. I wanted to send you a quick email to let you know that the Loaded Gun Trading Room is really fantastic. Dan and Matt are teaching us so much every day. I can already see that I'm approaching trading futures very differently. I've had several profitable trades already in the last 2 days. Again, this is all from the first month. This is actually a second month started last week, but you don't have to give much room to an experienced trader like this. Look at these compliments. Look at these. Look at these testimonies. You'll see many more on the page if you decide to do it. I want to open this up just a little bit and show you what I have for you. Here's my offer to you today. The Loaded Gun Simple Trading Plan, I've talked about, it's tested, it is proven, it is probably the hottest trading plan right now on the market. I'm sure you've heard about it if you do any kind of futures trading. You'll get the total plan, which fits on 1 sheet of paper. It's a simple trading plan. All the entrance and exits fit on 1 sheet of paper, and there are 2 basic videos. They're an hour and a half total, and they include all of the demonstration charts. It is a simple, I can't call it genius because I made it, but Dan called it genius. It is a simple plan that works. That's what you want in prop trading. Okay, this is a kind of a, I took this off today's trading. This is the NQ market. This is where we trade off. Look at how simple this chart is. Okay, it is a simple trading plan. You're going to get, currently there are 9 nuances. You're going to get access to all of the nuances. When we meet one-on-one, you're gonna have a private coaching session with me, and I want to learn about who you are, where your pitfalls are in your history, and then I want to match you with some of these nuances that we have. I want you to look at all of them, see what feels good, but then I want to match you from my experience. You may not realize certain things about yourself that I may be able to take. Now, I say one-on-one private coaching session. What I'm really giving you is 90 days of unlimited coaching. But the truth is that the vast majority have 1 or 2 meetings with me. And what I want to do is make sure you have the right nuances to match who you are, the slight changes in the trading plan that fit your style and who you are, that offset your weaknesses. But I also want to, of course, make sure that you understand the trading plan, when to get in, when to get out. Even though it's simple, you may have some old baggage that well, what about this? What? No, I'm going to tell you, forget it. Or forget it in the meantime, and then when you start making money, go ahead and infuse your old stuff in there, Frankenstein it if you want. And some people do, and I have no problem with that. But I want you to learn a trading plan that works first. So one-on-one private coaching with me, okay? We all get together once a month, the last Wednesday of the month, which is, well, it should have been yesterday, but it's going to be this next Wednesday. The last trading plan, or the first trading plan, we do it once a month on a Wednesday. And if you miss it, you look at the recording. If you know you're going to miss it, you can ask me a question and I'll cover it in the room. But we get together and we talk about successes. New people have some questions. We've been a lot of buddying up. You find some person that kind of sounds like you. We all have our little boxes on Zoom, and you get together and you help each other. Look, we're in this together. I want to make you a private individual trader. Otherwise, you're just going to be paying fees. You're going to be looking around. You need to start acting like a professional trader. That's what I'm morphing you into with this program, okay? 1 month free in our trading room. I'm going to give you a full month in the trading room. And that month starts when you finish looking at the videos of the, when you have a basic understanding of the plan and the nuances, that's, and you want to start the trading room, you can do it a couple of days after. If you're a fast learner, you can do it 2 weeks after, whatever you want. When I'll start you in the trading room and you'll get your 1 month free. So it doesn't all happen in the beginning. I want you to learn the trading plan first, then I want you to jump into the room and see it in action. That is also true of the coaching program, of the one-on-one coaching. The coaching that you have, when I say 90 days, you'll see it online. On the page I'm sending you to, that 90 days starts with our first session. So don't worry about that. Again, you'll probably only need 1 or 2 sessions, but you'll have as many as you need to understand the plan and understand how the plan should match you. Okay, I think I've explained that fairly well. Okay, now I want to give you my personal guarantee. I am so confident that you're following the loaded gun simple trading plan is going to result in you're getting funded by your prop firm so that you risk their money and not yours and still receive 90% of the profit you generate. Just share, or 70, whatever prop trading firm you're looking at. We generally use Apex, although I train for other trading, prop trading firms too. Just share your trading experience with me, that you followed the simple rules, it didn't work for you, and I'll refund your purchase price plus $500. I've never had to do with it because this trading plan works, okay? Plus, I want to get you paid. I want to be close to you until you actually get that first wire into your account. So that is my guarantee. Here is my price offer to you. Currently, if you look on the page, on the offer page, without the trading room, you won't see the trading room offered all, but I'm including it in this particular offer. I generally don't include it, but because it hasn't existed up till now. But I want to start by including a month, and I'm doing it here. Okay, currently offered without the trading room for $297. Today, I'm limiting this to 10, today only, or 10 traders, whichever comes first. And I have to limit to 10 traders because of the coaching, the private coaching element of it. The calendar is limited, and, I have about 10 coaching spots a week. So, I just don't want you to have to wait 3 weeks to get your session with me, especially if you're a fast learner. So today only, a limit of 10 traders, $797. So you're getting a $1,700 discount. I'm chopping off whatever that is, 2/3. Okay, so their money, yourprofit.com. Use the coupon code, today's date, June 26th. June 26th. Okay, and again, whichever comes first, do it now. If this sounds good to you, let's do it. Let's get on board. Let's make you a consistently profitable trader that's wired money into your account. It is happening for others. It can happen for you, but you've got to exercise the process that I have talked about in that. This is that one slide that I showed you. This is what, let's see if I can come back to it real fast. It's hard to do if I don't. Yeah, here we go. You must follow this process. I'm going to take your hand and walk you through this process, okay? So that is my presentation. I hope I've saved a little time to get back on schedule for these presentations, but I wanted everybody to know that I'm here for you. I'm ready to help you be a successful prop trader, but you've got to do it in the right way. Otherwise, struggle is going to be your middle name, okay? I want to see if there's any quick questions. Are there? I don't know. Because usually I see no screen. I hope that that wasn't for me. Are you with me, Anthony?
Yes, so I'm here. You want me to see if there's any questions?
Yeah, I don't see any, which is great.
Yeah, I don't see any other. I don't know what that means. Says no screen. Yeah, I see what you're saying.
Okay, no screen. We used to say no soap radio. I don't know what that meant either as a kid. In any event, their money, yourprofit.com, coupon code June 26th. Well, I hope you enjoyed. I hope you've learned from it, whether you go with me or not. It's a track to follow on, and it's really nice to have somebody guide you, somebody like me to help you out. So I have done it hopefully for an investment that you'll find extremely reasonable. So I'm ready for you if you are ready for me. So thank you for having me, Anthony.
Hey, thanks for being here, Norman. We appreciate you. Incredible insights. I think a lot of traders just had a major breakthrough moment hearing all of that, Norman. So I appreciate it. I enjoyed hearing it myself. His special offer is in the chat, and I highly recommend taking advantage of it. And now for our final speaker of the day is someone who's pioneering the use of AI in trading. Rory Powers of Right Line Trading will close out today's summit with AI automated bots. The future of trading is here. This is not just automation, this is smart automation. Rory will show how AI bots dynamically adjust to market conditions, eliminate emotional trading, and give traders a real edge in passing prop firm valuations and growing funded accounts. Let's hand it over to Rory.
Hey, thank you, Anthony. I really appreciate that great introduction. Wow, what a great crowd. Hundreds of traders here today in Traders Corner. I want to welcome you and thank you for joining me today. I've got a really exciting presentation today. Make sure you stick around. I know it's been a long event. I'm going to give you the short version. And we've got a really exciting system that's fully automated. And I think why we're having so much success, well, I know why we're having so much success. We have a very extremely powerful AI integration that I'm going to kind of give you some of the details about today. Unless you've been living under a rock lately, you've probably heard that artificial intelligence is really taking over just about every sector of our economy. And it's making everything that much more efficient, including this trading system. These are automated bots that are leveraging some advanced machine learning algorithms. So stick around. I've got some really great information for you. It's important to know that I am not a licensed financial advisor. If you're not familiar with the risks associated with trading, please consult with a licensed financial advisor. You could lose your entire trading account. With that being said, let's keep moving. I think something that distinguishes Right Line Trading from a lot of our competitors is really our transparency. I want to invite everybody that's here today to come join me tomorrow on YouTube live stream. You see, we trade our bots every morning on YouTube Live, which is really nice. You know, I've spoken to so many people over the years that, you know, always felt bad that they purchased a trading system or a bot before they had a chance to see it on a live market, and they had some regrets. So I don't want that to be the case with anybody here. So what I'm going to do is invite the entire audience for tomorrow's live stream at 9:15 a.m. Eastern. And I'm going to paste that link in the chat box. So come take a look and see. We're extremely transparent. Listen, the core values that Right Line Trading practices really go in line with you know, honesty, transparency, and integrity. It's really the most important thing to us. So we want to invite you in to come take a look. No strings attached. I want to start my presentation by discussing a testimonial that we received from one of our members, Marcia. The full version is on our YouTube channel, and I must say that it is 100% genuine. You see, the reason Marcia, her story is so inspiring was she came to us as a complete newbie. Her only exposure to the trading world, unfortunately, before coming to us, was she bought some bots that traded the Forex pairs from a vendor that sold her the bots, sent them over to her in an email, and that's the last she ever heard or saw of them again. She never got the bots up and running. All in all, it was a pretty lousy experience. So give me 1 second. The phone just rang. Okay. So when she came to us, she was extremely disappointed. You know, she had spent a significant amount of money on those bots, and you know, she felt like she was left high and dry. So the good news is, and the reason why she felt out of a debt of gratitude, she felt compelled to send us this testimonial. And Marcia, it's important to know, is really a woman of God, very spiritual, extremely honest, and really is turning into a phenomenal trader. But what she was able to do as a complete newbie by trading the AI auto trader in her testimonial, She describes how it significantly shortened her learning curve. She was able to achieve results that would have normally taken anybody else years in order to accomplish. Not only would it have taken a lot of time, but let me tell you, going through the school of hard knocks, I like to call it, because that's how we basically learn how to trade, is by getting screen time, which can be very expensive. And I like to refer to that as paying your tuition to the school of hard knocks. She saved a lot of money in tuition, and she was able to significantly shorten the learning curve by trading the AI Auto Trader. She passed 10 evals, $50,000 accounts, in her first 45 days. Within 45 days of ever trading, she passed 10 $50,000 evals. To this day, still has those 10 accounts and still trades them with us. So congratulations, Marcia. Keep up the great work. You see, I'm part of a very experienced and I'd like to say educated team here at Right Line Trading. It's not just me pulling the switches and flipping the levers. I'm part of a really great team. Our mission here at Right Line is to develop innovative trading strategies that provide our members with an edge. What type of edge, you might ask? Well, as software developers, not only is it important to be able to define risk to keep us out of the losing trades, but also if we can project, have some type of predictive value of the future direction of price, well, hey, that's like the winning lottery numbers, having them before the drawing. And that's our mission, is to provide our members with that significant edge when they trade the financial markets. On our team, I'd like to very briefly, I know it's been a long day, and stick with me. I'm going to rush through this, and I've got some great information for you. But I want to introduce very quickly the members of my team. We have 3 professional traders on staff. Our futures traders, Mr. Craig Emery, David Kushner, and our options trader, last but certainly not least, was Mr. David Wise, who trades our SPY super system, leverages the signals to trade options. So we've got some really great equity streams here at Right Line Trading in futures and stocks and options. Behind the desks, we have extremely educated software developers, engineers on our team. Let me briefly just mention Brock Miller. He's our college student getting his degree in computer science. Charles Sider is a graduate of UCLA, home of the Bruins. He has his master's degree in computer science. Sergio Luque Rodriguez, great guy. I've been with Sergio, working with Sergio for 10 years now. He has his master's degree again in computer science. And we have Mr. Mark Miller. Mark Miller is the owner of Right Line Trading, has his MBA from Cal State, and he is a U.S. Army vet. We're extremely, we love the military, and anybody that has served this country or really is involved in any type of occupation that puts others before self, we really owe you a debt of gratitude. We always give you a nice discount. Mark Miller, it's funny, just a little more background. His experience lies in automation and robotics, and extremely intelligent guy. And coming into this AI revolution that we're in now, we've really been putting a lot of company resources, time and money, into developing out these bots that are integrating extremely powerful technology that I'm going to explain to you in just a moment. So along the way, we've been around for 14 years. We've built a really beautiful community of traders of all experience levels. Very briefly, the voice that you hear behind the screen, my name is Rory Powers. I reside in South Florida. And other than I'm a Syracuse University graduate, other than trading the financial markets, listen, I'm a family man. I got to admit, that's where my heart is. But my second passion, as far as hobbies go, is saltwater fishing. I live down here in South Florida, right by the Florida Keys, and I have a small fishing boat down here. And every chance I can, I love to go saltwater fishing. But listen, the catch of a lifetime was my beautiful wife. And we have 2 beautiful children. This was a party just this past weekend. I like to keep my pictures very recent. Just this past weekend, we went to a pool party. And if you notice in the background, we live here in the suburbs. I call it the suburbs of Miami. But these people had this big, huge yard with horses. It's in Homestead. And my kids just love the pool party, 2 and a 6-year-old. So I've been blessed, and I thank God every day for my beautiful wife and family. Now, back to the trading. It's really a distinct privilege. I always say it's a privilege, and I really mean it. You see, I've been answering the phones here at Right Line Trading for 12 years now. And I've worn several hats over the years. And I think my favorite thing to do is answering the phones. I'm really not a telemarketer, but I'm a trader, and listening to other traders, their good days, their bad days, the problems that they go through, and just getting to know people in general. I'm a people's person. It's always been, I consider, a privilege. And I got to tell you, the genesis of the AI auto trader was really the lack of consistency. And if you're a trader, I think you know what I'm talking about. If you don't, you're one of the very few, and the lucky and the proud, that doesn't suffer from a lack of consistency. You see, this slide that I'm sharing now really sums up my entire presentation of the genesis of the AI auto trader. You see, this beautiful woman who looks like she is a professional. She doesn't look like she's, prone to outbursts. But you can see that things have finally built up. You see, if you look what she's looking at, it looks like the equity in her account over the last 6 or 8 months has slowly, or 6 to 8 weeks, has slowly dwindled down to almost nothing. It's almost blown her account. And she has reached her boiling point because she's absolutely convinced at this point that there has to be a conspiracy going on. Nobody can be that unlucky, right? Ever feel that way? Maybe it's a conspiracy between her broker, the prop firm, the market maker. She doesn't know who. But she's convinced that they're out to take and drain her trading account. So she's resorted to the sledgehammer. Ever been there? And she's ready to smash that computer screen to smithereens. You see, we've all experienced, it's important to know you're not alone. 95% of us as traders experience problems that we lack of consistency. I mean, every speaker, I've been listening in the background, I think every speaker has touched on it, on consistency. And that's really what kills us, is pulling in those losers and not having a trading plan that has some consistency to it. So we've all experienced trouble making money. And I think it's important to know why, okay? Because I think a lot of the times we don't identify with the real issue of what's sabotaging our own trading results. I was on Traders Corner a few months ago, a gentleman by the name of Chris Vermeulen, extremely intelligent guy. I always learn something when I listen to him talk. But he had done a study on human personality traits and as it relates to trading, whether or not these personality traits lend well to being a good disciplined trader. And during the course of his study, what he had found was out of the dozen or so personality traits that we all share as human beings, just to name a few, you have the analytical, the emotional, the driver. He found that maybe 1 or 2 at the most lend well to being a good disciplined trader. So listen, not to point the finger or place blame, but these through our genes, we're dealt a hand and we have certain strengths and weaknesses. Well, the vast majority of us are not, don't have in our genealogy the personality traits that lend well to being a good disciplined trader. In my first slide where I showed the 3 professional traders in our futures room and our options trader, David Wise, you see, it's important to know that they all 3 share something in common. They're very patient and they're very disciplined. And what I mean by that is in their minds, they have ingrained a set of rules for entry, or if you're almost like a robot. Okay, with a robot, we call it our conditions for entry. With these humans, these are their trading plan, and every single one of those rules must be met. And they define that as risk being at its lowest at that moment in time. That's when they will execute the trade where their potential for taking a winner is at the highest. And they have the patience and the discipline to wait for all of the technicals to line up just so. They don't rely on human emotion, on revenge trading, on over trading, on what the talking heads are saying on the news channels, or their own opinions or biases. They rely solely on the technicals. Okay. So make a long story short, there's very few of us that have that gift from God. Okay. Our personality lends well to being a good disciplined trader. So that's really the problem that 95% of us face with consistency. I'm sure we bought indicators that lack price or lack a proven trading methodology, but we all know that it leads to the same cold, desolate place of blowing out our trading accounts. You see, we've narrowed it down to two things that we believe are going to create trading success. Number one, you have to have the proper tool set in order to get the job done. Now, what I mean by the proper tool set is obviously we don't want indicators that are lagging price, but it goes a little further than that now. Now, in order to have an edge, we have to be technologically have a more advanced, superior, more powerful weapon or trading system than our adversaries and our opponents. We can't have a trading system that's a dinosaur. I was in one of these summits before, and there was a question about somebody wanted to use NinjaTrader 7. Why in the world would you want to use a platform like 7 when they have 8 now that's that much more advanced and more powerful? So you don't want to get caught using a dinosaur. You have to go to battle with the most sophisticated, powerful weapon to get the job done in the most efficient manner. Okay. Number two, because we suffer from these human emotions that sabotage our trading, and for the love of God, I can tell you that I have personally blown a dozen trading accounts, gone to bed talking to myself at night, wondering if I'll ever turn the corner in my trading career. So ideally, we want a trading system that can automatically get us in and get us out at the most opportune times. And that's exactly what I'm going to be showing you here today. The benefits from using our AI auto trading system, I'm going to go into it in just a few moments. I'm going to give you a little bit of the technology. I always get questions. I receive calls all the time. They say, hey, what changed here? We've been around a long time, and, really through trial and error. A dozen years ago, we didn't have the technology we have today. The elephant in the room when you talk about automated bots is always the same thing. It's always, well, they do good during certain market conditions, but then they go stale and they no longer work. And then I got to optimize them and change the inputs. And it's a 24-hour job. It's a 7-day-a-week job. Well, this AI integration is what's changed. Okay. These are bots that are going to dynamically, and what I mean by dynamically is while you're trading automatically, it's going to change its own parameters. Okay, its own parameters. And I'm going to tell you how we're leveraging AI in 3 different ways. If you're a prop trader, stick around. I like to refer to this system as prop trading on steroids. And we have our 1-day pass templates for evaluations, and we have our PA account templates for once you pass the evaluation that will sustain the funding and get you consistent payouts. Now, the type of AI that our system is integrated with is called limited memory AI. And the foundation and definition of it is it involves AI systems that draw upon past experiences or historical data to make future actions, to inform our future actions. The mechanics of memory and retention and disposal. This is a very news-driven market that we're trading in. We can go from a choppy ranging market to at the drop of a news report or an incident of a geopolitical incident overseas, the market conditions can change on the drop of a dime very quickly. So we have to have a retention system that has we call it our AI model, that has a very short look back. We don't care what it did a month ago. It has no relevance in what it's going to do in the next few trades. So we have a very short look back. So this temporary data storage always keeps the inputs fresh, okay? So what I'm talking about with this is we have our technology integrates each one of our bots, runs in tandem with what we call a drone. The bot and the drone will execute the trade together at the same time. The drone is going to trade 23 hours a day, and it's going to share a database with the bot, and it's housed on your computer. This is the closed loop machine learning system that is housed on your computer in this database. And it's going to keep going around and around in a circle, okay? And the way it works is the drone is going to continuously tell the bot what the average true range of the market is. In Ninja Trader talk, it's what is the maximum favorable excursion versus the maximum adverse excursion, or in layman's terms, what is the average true range of the market? Where is mathematically the most ideal location to put my stop and my profit target so I have the greatest chance of getting a profitable trade? This system will, to the tick, put you in at the perfect place with your stop and your profit targets based on the average true range of the market. It's also going to determine, trading all 23 hours historically, what times of the day it does the best. And it's going to dynamically change your trading session hours based on the historical performance. So if it learns, hey, every morning around the late at night, let's start at night. Late at night when the Asian market opens, I do really well for the first hour of that Asian open. And then once the London Open gets going, I do very well for the first hour there. And then there's a time in the New York Stock Exchange, maybe between 10 and 11, that I do very well. Well, what the bot is going to do is it's only going to trade during the most profitable times historically. See, if I look right in the parameters of our strategy, it can dynamically or automatically change the trading session hours. The drone is going to tell the bot when historically it trades the best. The bot will only trade those times. Now listen, it's not always about getting into all the winners. In fact, what we've learned is more importantly, it's more important to sidestep the losers, right? If we could just sidestep the losers, that's been a common theme throughout today's session. If we could just, get consistent singles, we're going to be much better off, even at the expense of watching some winners pass us by. So the AI model that I mentioned is looking at a 10 trade look back. So every time it takes a trade, these inputs are always optimizing themselves. It's going to adjust which trigger. The system has 4 different triggers that it could execute in order to take a trade. So once the trigger is selected, we have great conditions that we can control exactly how aggressive or conservative we want our entries to be. And we, out of the box, these all come to you optimized, and they will continue to optimize themselves. So part of that AI integration is it learns which signals trade the best in which market conditions. Then last but certainly not least, it's also going to do your trade management. You see, we've hard coded right into the strategy parameters the ATM. What I mean by ATM, if you don't know, that's the automated trade management strategy, okay? The automated trade management strategy, we've really gotten very sophisticated with it, where we can go for a very ambitious profit target and lock in a couple of legs of profit along the way. However, if in a trending market, however, if it's a ranging choppy market, our AI model is going to pull in our stop and our profit targets to a much more conservative level. And we have our break, we have a trailing stop where we could put just a plain old trailer in there. We could do a break even plus or minus. So if let's say the trade goes 30 ticks, we want to lock in 10 ticks of profit at that point and get to plus, our stop will be at plus 10. And then we have what we call a profit target window, where if our first profit target is 100 ticks, the profit target window, let's say, is 25. What that means is once price has matured to plus 75 or 25 ticks from my profit target, my stop is going to pop up and come 25 ticks behind price, or it's going to come to plus 50. So in this example, if price goes to plus 75, my stop goes to plus 50. And at that point on the NASDAQ at $5 a tick, I'm either going to make $250 or $500 on the trade. And then we have some really sophisticated stops that are based on momentum, that attach to indicators, that recognize certain candlestick patterns. If you're in a beautiful long trade and all of a sudden you get this big, ugly, bearish engulfing candle, well, it's going to automatically take you out and lock in profits. So we've got an extremely sophisticated bot that's leveraging AI in a number of different ways. So the candlestick pattern recognition is what we had just went over. And these are a few illustrations. I wanted to get through the presentation kind of quickly. Forgive me on the phone because I know it's been a long day. This slide is just showing how our drone, and you think of a drone, you think of like an aircraft hovering above the environment to get a bird's eye view. Well, that's kind of what this drone is. The drone is a bot that's got a big stop and a big profit target, and it's just hanging out there, seeing what the market condition is. What's the favorable excursion? What's the adverse excursion? And mathematically, in milliseconds, it's going to put your stop and profit target in the perfect place, and it's going to tell the bot historically when it makes the most money. We gotta filter out the losers. So this illustration is showing that the bot sits on its hands when the drone doesn't make consistent profits. It trades when it's consistently profit. These are the trading hours, and it sits on its hands when it's not. Okay, so I think the most important thing when it comes to automation, though, is the results, right? All of that, it was, sounds good, but what have you done? How much money have you made for me lately? That's all it boils down to. Let me tell you, most people would be happy with one bot that makes money. We're blessed with several bots that make money. We have a very diversified portfolio of strategies. We've diversified into gold and crude oil that just recently had some extremely great days with the volatility. We also have the index equities in the NASDAQ, the S&P 500, and the Dow. So we're trading a really nice diversity, not only instruments, but of data series, of candles, of bar types. And we're having a lot of success. So let's go over some of the best bots that we have in our portfolio. We have our ES on the 30 range. We call it the ES 30 range star bot. From March 1st to June 1st, trading just one contract after commissions, this bot has made $18,127. We have a member, Robert, who happens to be a professional at the optimization of these bots. He ran it on his computer, made over $60,000 in a 6-month span. And he told us, hey, I have bots from 5 other vendors, and it's my full-time job to continuously optimize them. Yours is the only one I have ever traded that I've never had to make an adjustment, not once. Okay, that's the power of this AI integration. It always keeps those parameters fresh. So 18,000 between March and June on my computer. A variation, another strategy we have running on the ES, we call it the Volkswagen. From March 15th to June 1st, up over $26,000, trading one contract after commissions. And we have some strategies on the NASDAQ, on the 20 Unorenco and the 30 range that I'm going to highlight in my prop trading section, which is now. Listen, prop trading has stormed onto the scenes. If I don't get to your question, please forgive me. I'm not being rude. And out of respect for your time, I know it's been a long day. Please put your name and your phone number if you have a question. I know I had to go through everything very fast, and I apologize. So if you put your name and number, only I can see it. Nobody else can see it. The host, Anthony, who seems like a very nice guy, he's the only other person that can see it. But if you put your name and your number in the chat box, I'm going to give you a call, and I'm going to do my best to answer any questions that you might have. So let's continue. The prop trading has stormed onto the scene. The charm, the allure of trading a prop account is not putting our own capital at risk, right? For a nominal fee, we could jump into the game with the potential to get a really nice payout without having a lot of skin in the game, which is very attractive, especially if you're someone like me who has quite a few bumps and bruises on their trading journey. So we have, which are going to be included in our special offer today, what we refer to as our prop trading portfolio. They trade both evaluation accounts and they trade PA accounts or SIM-funded accounts, whichever you want to call them. These bots will also trade a live account, okay? So first, let's discuss the one-day passes. The one-day passes, I'm going to show you a very short video. It's only a minute long, and it's going to show you the spirit of the one-day pass. And in the video, let me set it up very briefly. Mark is trading on YouTube. Let me go back. And he's using a trade copier. The one-day pass templates, we have them on all 5 instruments. They will take a shot at passing your evaluation in just one trade. What they do is it's a very aggressive strategy. Sometimes the prop firms will have an 80% or sometimes even a 90% discount, where if you just want to get it over, pass the evaluation in a hurry, this is for you. In this video, he's trading the one-day pass. You're trading on a $50,000 eval, 10 contracts on the NASDAQ going for 62 ticks. So on a trade copier, he puts 6 evals at one time onto one of our most powerful one-day pass templates. And in one trade, in the video, now what happened just now is he got into the profit window. Price was only 10 ticks away from his profit target, so the stop flew up to just 10 ticks behind price. So worst case scenario now, he's going to make either $2,000 or $3,000 on this trade. And in this particular trade, it goes all the way, and he passes 6 evals on that one trade. That's our one-day passes. Now, once you get the funding, obviously you have to pivot to a much more conservative strategy that's going to sustain funding and conform with the consistency rules and the trailing thresholds. We have these bots. One of them is called the Power Play that we trade every morning on YouTube that will automatically conform to all of the rules, and they are stringent, and you must conform to them. But this bot will conform to them automatically. It's called our Power Play, and you could see in this video that I'm using a trade copier. And if you come join me tomorrow, you'll see this live. And I put 6 different Apex accounts on my trade copier, and my Power Play strategy just got in on my 30 range here. And what happens is once price matures to plus 75, my profit window kicks in, my stop will come down and lock in 50 ticks of profit automatically. Now I start taking some heat on this trade. This is all automated. It's all automatic. Now it starts maturing back towards my profit target. And you'll see when it comes within 25 ticks of my profit target, my stop is going to fly down and lock in. Let me show you right there. Now you see automatically my stop came down. And at this point of the trade, I'm either going to make worst case scenario 250. If price continues to the downside, I'm going to make 500 across each one of these accounts. And that's really the allure of these prop trading, of these prop accounts. Is my goal each morning on YouTube is to make between $200 and $500 a day, right? And if I do it across 5 or 3 accounts, 5 accounts, I'm going to make 200 or 300 times 3 or times 5. So even a small profit, when you can 3x your gains or 5x your gains, turns into an extremely significant amount of money. So this particular day, the trade goes all the way, and you could see on my copier that I made $2,500 that day across, or $3,000 across 6 Apex accounts on that one trade, $3,000 on that one trade. And that's using the trade copier, which is sold separately. So those are our prop trading templates that we are going to include in this special offer. So our one-day pass, remember, I answer the phones here. I really like to under-promise and over-deliver. I don't want you to call up and be unhappy. I like to talk to happy people. So what I always tell people in these events is that the one-day pass is probably going to pass 1 out of 3. Remember, these are statistics. There's nothing in trading that is guaranteed. If anybody tells you that a trade is guaranteed, they're lying to you, okay? You always stand the chance of losing on every trade you take. It's just a fact of it's just inherent of trading. So you could lose, out of 10 trades, you could lose 10. You'd probably be one of the most unlucky people in the world, but it could happen. Statistically, you're going to pass 1 out of 3, okay, or 33%. It's actually a little higher than that. You could lose all 3. You could win all 3. Statistically speaking, I'm comfortable telling you you're going to get 1 out of 3 that pass and get you a funded account, and you'll be into the PA accounts. Now, I wanted to share with you my own results. And remember, just because I work for Right Line Trading, it's important to know it does not make me a good trader. Okay, I promise you it's true. What's made me a good trader are these bots. And this happens to be, and I'm going to show you my own performance. This happens to be a screenshot of my own PA accounts that I've traded since January on YouTube, all live, and they're all recorded. So what I'm telling you is 100% the gospel, okay? And you can see this equity curve. It's absolutely beautiful. We look to make 250 to 500 a day. The secret to this success has been the trade management that I just showed you and capital preservation. It's having the discipline of once you hit your profit goal to stop trading. Once you reach your profit target, stop trading. Today, I copied across 3 accounts. I'll show you my trade copier. Across 3 PA accounts, I hit $150 across all 3 accounts. And I stopped right there. It wasn't quite 250, but I don't want to turn a green day into a red day, right? I took what the market gave me across 3 accounts, even though it was only a $150 trade, still it was a $450 gain across all 3 of those accounts. And that equity curve just keeps going up and up and up. And it's at the high water mark right now at 32,769 across 3 PA accounts. Okay, all done live on YouTube. So a common question is, hey, can we use this on our prop accounts? I know for a fact with Apex you can, and many of our members, including members of our team, are all getting payouts. Another testimony I wanted to share really quickly, and I know my time is almost about up, is we have a member named Judy. And let me tell you, some of our best traders happen to be females. I got to give it to my hat off to them. Judy is really traveling the world. She's retired, I imagine, and she took this picture and sent it to us in our Discord. She was on board the MSC, a cruise ship on the MSC cruise lines in the Mediterranean. In Italy, she happened to be in this particular picture, but she was connected to Starlink, and she has a portable. Look at her little trading system here; it's absolutely beautiful. Whereas she has 3 portable monitors, including her laptop, and she trades these automated bots with us from different parts of the world every week. And she's getting payouts through Apex trading these bots. So listen, if you're retired and you want something to supplement your income, this certainly has the potential to do it. Judy is a living, breathing testament to that. Simon is across the pond. I always get members that are overseas. They say, hey, I'm in Australia, I'm in the UK, I'm in South Africa. Can I trade this? Yes. The answer is absolutely yes. So a lot of our members are having a significant amount of success trading these automated bots. And I honestly believe in my heart that you can too, only because I've done it. And let me tell you something, people, like I mentioned before, you think somebody who works for a trading company is automatically a good trader. I can tell you, and you'll see me on YouTube tomorrow, I am a habitual, I love to drag my stop. When I see the P&L start going in my favor, I'll squeeze that trade and I'll smother it out. But it's just an instinct. But let's get into the special offer. We're going to do something special for Traders Corner. We've got a few hundred people in attendance today, and everybody's invited to join me tomorrow. And our special offer for Traders Corner, it's going to be a 50% off. We're going to do the monthly memberships instead of $11.98. We're going to do them at $5.99, 50% off. We have the annual membership, which will provide you with the full year. What's included in whether you purchase the monthly, the annual, or the lifetime is we have absolutely beautiful, I refer to it as our discretionary trading system. We have beautiful indicators that provide you with signals for entries that are absolutely dynamite, where if you wanted to take an entry, when these green arrows come up, These are 20 Unarenkos. So these moves to the upside that you see with these green arrows, each bar in the direction of the trend, you know, signifies that it 20 ticks for each new bar. So let me tell you something, those are big bars. But what's included are chart templates for each one of the instruments, all of our strategy templates, not only for our full portfolio of strategies, but we're including the prop account templates, both the one-day pass and the PA account templates, which is a $1,699 value. If you're joining us here on Traders Corner, you're going to get it all included in this special offer. So the annual membership is going to be, instead of $29.98, it's going to be $14.99. If you break that down to a monthly payment, it comes out to about $120 a month. $120 a month. This system can really, it could burp and make $120 in a split second. It really puts you behind an extremely powerful powerhouse system. If you're somebody that just does not like subscriptions or recurring payments, then the one-time payment is for you. The lifetime license is half price, $49.99. This weekend, get it for $29.99. Once you pay it one time, you own it for life. Okay. Now, because this is Traders Corner, we're going to do something a little bit special. I got a coupon code for you. I came with a coupon code. It's going to knock $1,000 off our website price. It's going to bring your one-time payment, your lifetime payment, down to $19.99. $19.99. My associate Brock just put the link in the chat box. $19.99. You pay that one time. You'll have the full portfolio of strategies, all of the prop trading templates, ongoing customer service and support. Use coupon code $500 discount at checkout, and it's going to knock off, it says 500 discount, but it's going to go from $29.99 to $19.99. We do accept PayPal as a payment option at checkout. They have a very convenient option called PayPal Later or PayPal Credit, and you can pay over 3 or 6 months interest free. If you're not very proficient at NinjaTrader, don't worry. We are going to hold your hand like you've never had your hand held before. We have a beautiful Discord community of traders. In our Discord, we have a plethora of training tutorials. We do a live training session every Wednesday. We trade the system with you live on YouTube every morning. You will never be in the dark, okay? Listen, unlike that vendor who is very silly, that burnt their bridge with Marcia, who is a beautiful, God-blessed woman, took advantage of her and sold her those bots that ran on Forex and didn't answer her calls and sold her a bill of goods. That's not what we do here at Right Line Trading. We build bridges to long, prosperous relationships. In fact, there's many people in the audience today that have been with us for longer than I've been here, and I've been here for 12 years. So we want to make a lifetime membership a profitable endeavor, the start of a great relationship. So again, I just want to close with one last message. If your journey, your trading journey has not gone as it was described in those marketing emails that we all receive, I remember getting them too, where they promise you that how easy it's going to be and how fast you're going to make just this tremendous amount of money and how simple it's all going to be. Well, if things didn't quite pan out that way and you've got some bumps and bruises like myself and you've blown out some trading accounts, I come with a message of hope today. I believe that we have the future of trading with these AI leverage bots. So I really want to encourage you to join me tomorrow, and I hope that you decide to come with us and become a member of our trading family. Anthony, I want to hand it back over to you. Thank you again, everybody, for your time, Thank you, Anthony, for having me. It's always my pleasure. Really, it's an honor to be here and have the ability to present this for you. God bless you, everybody. Have a great weekend.
Hey, thank you, Rory. That was a powerhouse presentation and a fitting way to close today's incredible lineup. And to all of you joining us live, we hope you leave this summit with clarity, new clarity, powerful tools, and the confidence to navigate today's volatile markets. Before you go, please check the chat for all available offers. Many of them are only valid for a short time. And thank you again for being a part of the Trader Corners Investors Summit, and we'll see you at the next one. Thank you so much.